Hello stream, hey stream, how you going? Today is day 27th, I believe, of trading the 150k express funded accounts. We're currently down on the first trade. We are in a second trade now. We're in our second trade right now, and this is the first trade here. I took a protected structure setup, which is I'm okay with. So as you can see here, on this sort of breaker structure, we've got the protected high up here on the 15-minute from yesterday, last night session, and then we sort of have this sort of FBOS model again, which literally happened yesterday, and it played out perfectly. As you can see, small bump, breaker structure, turned its FBOS, swept there, and then moved up. So we're just trying to play off the same sort of idea again. Just like yesterday, I took a slightly early entry, which was the loss, and then the real one was the one right after. So, oh sorry, a couple days ago. So it just much like this scenario now, I took look, it's a bit messy. I don't know if you guys can see what I'm seeing, but if we just have a look at this, obviously we've got this sort of, let's pull back here, this one was the sort of breaker structure. Okay, or I guess not even that. If you don't want to call that one the breaker structure, this one right here itself could be the breaker structure. This is no FBOS. This is just an internal one. Don't want to confuse. So let me just delete some of these things. So it reduces confusion. Okay. So anyways, I took a protected low setup. Internal protected low setup, because this is technically the lowest swing point of this channel breaker structure, as you can see. So this is technically an internal protected low setup right here. We've got the inducement. Have the inducement. And the first one, and then if we look on 3 minutes, maybe a bit clearer. As you can see, we've got the internal protected low here. I had some inducement under here, and I actually know, you know what, I actually thought that this was the sort of protected low area, as you can see that. And then I saw this trendline liquidity, and I was hoping to take a bounce off this protected low to the trendline liquidity, but it just reversed a bit before I could take profit. Anyways, that was the first loss for today, and I'm currently in a deeper mitigation. So as you can see, price swept. And what I'm thinking now is price has sort of, it's come down and it's tapped into this lower, stronger protected low here. And then it has swept it initially, and then it's been respected. And so I took a long off the lower time frame here on the 100 tick chart. And look, I'm just trying to get a quick scalp. I'm trying to stick to a tight risk here. Try to maintain a maximum of $500 loss for the day. So this trade is about $200 plus the 300 I initially lost on this trade. Look, it was floating a little bit, but not really enough for me to close out. As you can see, it didn't even hit the internal protected structure. So this one here, there is no internal protected structure. As you can see, it's just straight to the top. And I think that's a valid trade for me. And so, look, as we are slowly moving up, I might just start to go break even there. Let's not risk anything. Let's just try and let it play out. And that is essentially what we're looking at today. I'm not going to be my stop loss now. I'll just let it. If it breaks even, breaks even. This is a low probability, somewhat low probability trade. We're taking a counter trend trade on the lower time frame, or a 15-minute internal. So this is a protected. This is one on the 15-minute now. So this is the protected low. This is the internal protected low area. So there's an internal protected low kind of setup. It's not the greatest, really. Like, it's kind of just fuzzy. So yeah, not the highest probability. So I'm quite okay with moving my stop loss to break even pretty quickly. And yeah, we'll let this one play out. Yeah, I think that's it for today. I'm just going to consider, if I have a look here, I might just scale in one more micro. there you go. Just so that if it does hit TP, then I am sitting well above the $200 profit on all my accounts. See, yeah, that will be a good little, I guess, scalp for today, and then I'll close off for potentially today or the rest of this afternoon until tonight's New York Stock Exchange open. So yeah, that is what we're looking at today. I'm going to move it. I'm gonna put. I sort of want to hear what. I sort of want to hear what's going on with. Oh mate, what is it? I think it's this one. Screen one. Yes. Let's just see what Dakota is saying at tops at TV. I know he was at the short. He took a small short, which is pretty cool. So
take out the tilt on the practice account. Yeah, you know, that's one thing about practice accounts, right? If you are frustrated over something, or you know, on tilt or emotional, sometimes the best thing for you to do is, you know, if you need to trade or if you want to trade, do it in a practice account.
It's $30
until you gain your confidence back or you're able to control your emotions again.
Yep. There it is. So I just did one more small scale it, and I'll leave it as is. Be right back.
As soon as you start getting emotional, don't think about money. Don't. I see it happen, not in just trading, but I'm kind of like that too, where if you get frustrated, you want like spend money, right? I'm going to spend money. I'm going to throw money at it to see if I could fix it or get back to break even. I've seen that happen. I've done it. I'm like this. I took a loss. I'm down. I'm just gonna. Next trade is just gonna be twice the size, and then if this one's a winner, I'll have my money back. You're flat, Joe. Good. Thank you. Yeah, Richard. Yeah, Lance was definitely did not like the prop space, and valid reasons for it, right? But it seems like, you know, that's the beautiful thing about actual good constructive conversations and, you know, some open-mindedness. You know, you have an open mind, you can have good constructive conversations, and, you know, maybe you have a change of heart, maybe you have a change in point of views. It's very good to be able to have that open dialogue, and it's also very good to be open on change of views, right? Where I was very hard-headed, myself included, about the trade copier. I was thinking for a while, like, the trade copier, you're copying 5 accounts, you're copying 10 accounts, 20 accounts. That sounded so freaking stupid to me. It sounds like someone's just going to the casino, putting their money in a slot machine, and they hit a multiplier, right? It's a multiplier. That's just, instead of putting $100 in, they're putting $1,000 in, and then if they blow one account, they're actually blowing 10. I thought it was the dumbest thing in the world, but the more I understood why traders are using a trade copier, the more I liked it. Now, with anything, there's right ways to do it, or healthy ways to do it, or unhealthy ways to do it. There's always both sides, because a trade copier is definitely one of those double-edged swords where if you are consistent and you have that confidence to follow your process, it could be very beneficial, and it could help with emotions, or, you know, like this. If this was trade copied 5 accounts, you know, instead of $63, you know, 63 times 5. That's a good day. That's a good day. But then psychologically, I'm only looking at 63. And psychologically, I was only in 3 micros. But if it was copied against 5, then I was actually in 15 micros, right? Or 1.5 minis. And that was a good day. So there's benefits with it. And then vice versa, right? The negative effect of the trade copier, and that's what I was in the mindset of. I only focused on the negative side, is it gives traders more room to gamble, and if they blow an account, they just purchase 5 more, blow those 5 more, and it just created very bad habits. So yeah, that's the best thing, is to just keep an open mind. What did MP say? I don't know if it was MP or someone else, where they said, you know, strong opinions loosely held, looking for that very constructive conversation, looking to improve. Because the moment you think you're the best, and then the moment you think you're 100% right and nobody else can change your mind, that's a very dangerous mindset. Yeah, if you go on tilt, then those 5 XFAs could be dangerous, or 5 combines could be dangerous. Another bad habit is not clicking cancel, right? Not clicking cancel. I've been there. I've been there. Not clicking cancel. Joe Black, thank you. I mean, you kind of have to, right? Go through ups and downs. If you're struggling, if you're starting to suck at trading, you either give up or you adjust. Give up or adjust. Today I almost canceled my sparring. I wasn't feeling 100%, and I had a sparring session today, and I almost canceled it, but I went to it, and I was not at 100%, and I almost, yeah, it was not a good session for me. But in any sport, in any analogy, adjustments are key. If you can't adjust, you get left in the dust. Can you explain why I went short on this entrance? Yeah, here's a 5-minute chart. You remember that you could, it's also recorded here on YouTube, so you can re-watch it at the very beginning. I did my analysis on the Nasdaq, and you know, we've been selling off, we're down. I did an average true move, and I said I could see this market coming down and testing these 760s, 750s, and we did start to break down a little bit on the 5-minute chart. And then over here on this 100 tick chart, I could see that, you know, we had a level, right? Here's a pivot, here's another pivot, and then we rallied up, and it looks like we were just going to break down. I don't know, did I enter here? I entered maybe a little bit lower, and yeah, sure enough, as soon as I entered, moments later, we just dumped. You think your problem is strategy hopping? It's very common. That is very common. You get stuck in the rinse and repeat. You try a strategy, you struggle, you try another one, and then you struggle there, and then you never find your own. And yeah, I've been there. Every trader's been there at least once. Keep trading, switching strategies until you think you find one that's the golden one. Most of the time I find it's not the strategy, it's the mentality. Not the strategy, but more of the mentality, psychological. All right, let's see. Gold's breaking out. I did miss a trade. I missed a trade. Look at that nice 3-bar reversal on the 5-minute chart. Top of the hour came and gone. And we had that nice breakout, so I missed a trade right there. Over leveraging, yeah, that's can definitely be part of it. Definitely part of it. Chopper 77, what's up? Well, so far, first trade in my live account using this, and we're in the green. 406 contracts sitting in the Nasdaq. Yeah, 400 contracts sitting there. Yeah, 406. Or at 404. Or 400 contracts sitting at 785. Looks like there was a 100 fill right there at 88. All right, let me focus. I'm going to focus on gold. So let's focus on seeing gold first. What's my take profit on gold? I don't know. I could see us getting up to these upper 90s and maybe a test of 3,400 even. It's a big round psychological number. Gold is doing something. I've realized that I need a few survival setups. I mean, one of the biggest keys of trading is being able to survive so that you can trade till tomorrow, right? It doesn't matter how much money you really make. I think it's more important that when you are struggling, how much money you lose, right? Because it's easy to make money when everything's going your way, when you are starting to get in the groove and the market's going in your way and you're feeling it, right? And you're reading the market well. But the hardest part is when you're struggling and you're not reading the market well, how much money do you lose, right? Because if you lose 50% of your account, technically you have to double your account. You have to make 100% just to get back to break even. So the better you are at controlling your losses makes it so much easier when you adjust and start to make money. How did Davey? How did I lose $200,000 a day? No, it was not 200,000. It was like 240,000. All right, and yes, that was a loss in a day. I do fine overall. I do trade. Can you explain your strategy criteria for long entry using an ATR? Yeah, I forget. It's new. That we have new traders coming in every time, so they don't know everything or the full story. Can you explain the 100 tick chart? You say it a lot. Sure, I could explain it. Davey Havoc, yeah, it's all relative, chat. Whenever I talk dollar amounts, just understand it's relative. I have worked with, I've talked to traders, investors. An intraday swing on their P&L is greater than that, right? Think about a longer term retirement account. Say you have, okay, this is extreme, okay, chat? This is not the normal trader. But yeah, there's some doctors, some business owners that they have, you know, say, for example, $9 million in a business account, or from their business or their retirement account or whatever, right? And they're using it very diverse and long-term, not day trading, but like, yeah, I own, say, $500,000 worth of shares in Apple, and then $500,000 worth of this company or X company or Y company. And then the swings we were seeing in the market this year, where intraday swings where we would be up 3% and then down 5%, that's a 7% swing. So what's 7% of, say, a $5 million portfolio? Or for that example right there, there's a good example. What's a 5% swing of a $5 million portfolio. That's 200, what is that, 200, 250,000 intraday swings that we were seeing in daily, hourly, right? During all the tariff liberation day. Some crazy volatile markets. Okay, we're starting to build. We're starting to build up towards these highs here in the gold. So I am liking longs even more.
Hello chat. So as you can see previously, I stopped it early for another break-even trade, round break-even. Very small profit. I'll consider that a relatively I'll consider a break-even. Let me just pop that in there. First one was a loss for about was 250, so 0.05, and then next one was a small win, break even. Look, it would have broken me out around there. It would have stopped me out, I believe. Let's actually have a look to be precise. Maybe it would have kept me in. Maybe it would have kept me in. Let's have a look. I'm curious.
During, this is not the
Yeah, so price went just below my
first trade in my
entry on that stop
Trader's
loss
been there.
order thingamajig. Let's have a
go
look.
through.
Where did I close it out? Just below it. Okay, so from there, let's just say 95.50. Where do we go? 9.5. Yeah, it would have closed me out. Yeah, it would have closed me out. 95.50 for a small loss, but I did the right thing. I could have maybe not moved my stop loss until break even and kept it. I'll probably still be up, but like we said, it was low probability trade. Realistically speaking, more ideal and probable trade now would be a short from this position here, and so that is the last. I know, you know what? I'm actually going to set it up because I actually like this trade a lot. And I'm going to set limit sell 10, so times 2 times 10 is 20. 20 times about 10 stop loss. Okay, no, that's a bit much. Let's go 8. I want to do 8. Try 8 micros. So what's that? 8 times 2 is 16. 8 times 2 is 16. 16 times 12 is, this is about 200, just under 200, but maybe 12.5. Cool. I am about to head to the dentist, but I like the idea of this trade. So risk parameters will be around 230. And because it is a we're doing a slightly higher risk to reward trade here, guys. Slightly higher risk to reward trade here. Why? It is a pro trend, lower time frame continuation, 3-minute internal break there. Because at this point, I don't know if we should be still looking at. I don't know if we should still be looking at longs, because obviously we've got break of character, change of character already on the lower time frame. Change of character. Yeah, that's the internal break with the internal protected high here. Well, I guess 3-minute protected high. And then this one here, would you say that is a break? Not really. So, realistically speaking, on the 15 minute, oh my days, I'm so sorry. Look, I might take another long here actually, because this is the double bottom with the inducement. So I'm gonna take a long there. I like that. Oh. Just gonna add a smidge more, maybe 2 more there below, even it out to that. Okay. Okay, chat. I like the look of this trade here. Actually, I'm just gonna spread it out a bit. Oh my days. Actually, no, you know what? This is actually a really good spot to load up. And there we are. Okay, cool. Okay, great. I'm gonna close that order. Close that one there. I'm okay with this long. I'm okay with this long here. Let me just adjust some things. If I lose, I'm closing out for the day. Oh my days. Oh my days. Did I just make a big error? Look, I am trying to counter trend trade, which is low probability. Oh, what am I doing? Oh my gosh. Just pull that down just a little bit, give it a tiny bit of breathing room. So it can at least, oh my days. Yeah, look, it might just break through. Yeah, I should have maybe looked at taking a short from this position. Oh my gosh. Bad trade. I'm gonna try to get break if it comes up, breaking even. SAP. Or do I exit now is the question. Come on, do I exit now? What is MES saying? Yeah, right. Nasdaq is having a bit of a bearish SMT. Asia session has been bearish the entire time. Oh. There it is, close out there. That was a sort of rush trade. Our time frame is bearish. I should look at bearish continuations. At bearish or supply POIs. Or if I'm going to stick with a 15-minute bullish trend, then I should be looking at 15-minute point of interests. So if I jack this up to 250, times what? I'm going to set up one small order here. Let's say limit buy of 5 times 2 is 10. 10 times, let's say 25 points. So I put that there. If I give it 25 points, what does that look like? Yeah, it looks alright. 25 points there. And then it's a 3-to-1. Three to one, right? Yeah, 3-to-1. So risk 250 at the bottom there. What could I have done to improve this? Oh. Didn't wait for confirmation. Let's have a look. Might just have to wait, guys. Yeah.
Do that, right? You don't have to follow the same strategy on every single market. Say gold and Nasdaq, maybe I trade them differently. And that's probably the right answer, too, to be honest, is each market has different personalities, and that would only make sense. Nasdaq continuing to push lower. Yeah. Yeah, I think we still have more room. We're down 0.5% here in the Nasdaq. We're getting to this level. Not too much room, maybe an extra 25 points. We continue to sell off too. We'll see. Made a good amount today. The day's just starting, but I am up $107, so I'm pretty proud of that. Trading micros, and if I was trading my normal size, I would be up $1,000. It's $1,000 banger day, but don't want to get into that what ifs, right? He was about. I should have been a bear in like April or March. March was the good time to be a bear.
I want a long here.
Zachy, are you being serious?
I'm gonna take a long here.
You never explained your strategy and where to enter/exit.
And
I just
TP
blew
at
my
the
account.
0.618.
I can't take
If
that
it does,
comment serious.
28 seconds.
500 lots on ES. Going.
Small trade here.
Yeah.
TP there.
Do this 10 times a day, and that's $1,000. Thanks, Joe. Joe, I never know whether you sometimes are trolling, sometimes are being serious. Just so everybody knows, Joe Black, who's in my VIP team, did pretty well. I enjoyed seeing statistics, and it was a rough VIP season, because that was the VIP season where the volatility was insane. Insane. That was, what is it, March, April, May? Like, I cannot see another season for the VIP team members to have as crazy of a market like that. Yeah. Greetings from Colombia. Welcome. Don't spam the chat though, please. You see the comments. Don't spam the chat.
Small scalp here.
Yeah, there's no perfect vote for a storm.
Just a 0.618 because it seems to be doing it in today's bearish momentum.
All it takes. There's no luck, right? Luck is, what's that saying? Luck is between the at the crossroads of hard work and preparation, or something like that. Make your own luck. It's true. The harder you work, the luckier you get. Everyone here that likes Michael Jordan, that's one of his favorite things to say, or not exactly, but he's like, same thing. Where, what did he say? He's like, I'm sorry if I made it look too easy. Yeah, well, I don't know if that's the exact quote or not. Dakota, for scalping, is one-to-one risk reward a requirement, or can you scalp with bad risk reward with small sizing and adding? No. So I would say that you cannot. This is an interesting conversation. So let me do this. Let me show this. This is some statistics. Here's the dashboard. Here's a combine. Okay. Here's my win trade percentage. 71% win rate. Okay. But then the average loser versus average winner, that's an upside down risk reward. So you can't really, it's hard to give one without the other. Now, I wouldn't say focus on one. You can't have risk rewards and say, if I have a good risk reward, I'm going to be profitable or successful. And then you can't say, oh, if I have a high win percentage, I'm going to be profitable and successful. That's wrong. You have to have a balance of both. It's okay to have an upside down risk reward as long as your winning trade percentage is high. The better statistics to pay attention to is your expectancy. If you can make money and you can have your expectancy, your I don't know, there's other words for the same meaning, because if you make money in the long run, that's all that matters, right? You can have a low risk reward and a high winning trade percentage, and you can make money. Or the opposite, right? If you have a high risk reward but a low winning percentage, you can still make money. It's a balance. I'm all red. OBS is silly like that sometimes. It seems like I'm always adjusting it. Trading is a fast way to get poor and a slow way to get rich. I like that. Unless you're a roaring kitty. Roaring kitty. Do you trade crypto? I don't. I do not trade crypto. I almost bought Bitcoin on that pullback. I should have now with hindsight. To go to start scalping with you this week, my preferred trading method, but you helped me so much to make smarter scalps. Got paid out $1,500 today. Wow, nice. Did you take a payout? Is that what you mean, Brad? Did you take a payout or did you just make $1,500 today? Either way, it's the same thing. It's good. Obviously, I want to hear about the payouts. Any hashtag slow markets? Hashtag slow markets meaning if you post on Twitter and you tag me. Oh, you took a payout. Okay. Congratulations. Nice. I like that. That's what I want to hear. Yeah, I'm gonna take it. That deserves credit. I gotta appreciate stuff like that, Brad, if you don't mind. Gotta appreciate it. Love to hear that. Guess the 3-bar reworked. If you shorted gold, sure. I'm not active. I don't have Instagram. I don't have other social medias other than the one that you see on the Twitterverse. And I'm doing it for the community here. Maybe, though. I'm thinking about it. Okay, I'm thinking about it. I might have some stuff cooking in the background. Might have some stuff cooking in the background. Wow, NQ. Do we bounce? Are we still continuing to sell off? We dropping like, yeah, we're at that support zone now. These 760s, 750s. Another 30-point sell-off. What am I doing watching gold? Nasdaq is on fire. Something's different about me tonight. I don't know. What even is gap? What even is a gap? Look over here. That could be, might be, that's a gap. It's a gap in price. But usually you want to look at the bigs, like the minis, like NQ, not MNQ, like NQ and a different time frame, not a tick chart. To me, gaps don't mean anything. But who knows? Man, look at this Nasdaq selling off. How do I get 2 time frames? Up here. Select layout. And then you just change the time frames on each of the charts. Buying opportunity here in the Nasdaq? Maybe. Maybe. I don't know. We're down here at this level of support. Let's look at the hourly. We could still get down. We could still sell off further. Let's look at the daily. I was going to point something out on the daily. Is this a 3-bar reversal on the daily? Yeah. Right? But we've had it before. We've had a 3-bar reversal right there. That got bought up. We had a 3-bar reversal here. That got bought up. I lost my butt on that one. Lost my butt on that one. We got a 3-bar reversal here. Does this get bought up? I don't know. This is an unfair value gap. An unfair value gap. That was unfair. But yeah, these low to mid 70s or 700, 730s. So it's like what, 718. Nasdaq's down 0.5%, 0.6. Where's Jay? He's been working all day. I didn't want to. He definitely needed a break after how well he was able to do the day show. Bringing people on, people leaving, managing charts. He even did at the buzzer. And so I would not want to, like, yeah, Jay, come join me for slow markets tonight. He needs a break. Especially, and then, you know, maybe he does have some preparation, I'm sure, to get ready for Chicago next week. Yeah, he hosted all day. Yep. Yeah, he's a very busy guy. How do I create a stop in Top Step? I'm not sure if I really understand what you mean, but you know what a good, if you want to know how to create something or do something, some of the basics on this platform, there's a question mark over here on the left hand side, and you can go in here and then there's like a help center, right? There's a help center, there's 5-minute tutorials, there's a few sources that you could go through and get those details on. Nasdaq found some buyers right there in those 50s. Like 25 points. 20 points right now, anyway. Those 5-minute videos are awesome, right? Oop. Go here, top step 5-minute tutorials. Like break even button, copy trade, additional features, placing orders. Maybe that's what that trader was talking about. Nice. Great, short and sweet. Yep. Gold's still not doing much. As someone teetering on futures probability and learning the will option strategy on the side, thank you for oh, of course. 4B. Of course. Shorted euro, US dollar. We have currency futures. Someone's in here trading currency futures. What is that? 6J or something? There's Australian, Japanese yen, Swiss franc. Today, I think we've seen someone on the leaderboard trading the Swiss franc. That was great. There's the euro, 6E. Vikram, haven't seen me use the ATR. Is it something new? I'm doing it to demonstrate everyone kind of what I'm doing. It's been a lot better to explain it to traders, where I'm using an ATR to help judge for my take profits for scalping take profits, I guess, judging volatility. But typically, honestly, if I was not on air, I would close out of these. Not so much gold, because I still need gold. I don't trade gold very much, and so understanding the volatility in gold when scalping is different. But when I'm trading the Nasdaq, I've got a really good understanding of how the Nasdaq trades, so I don't need these ATR indicators on my chart. So if I was trading just by myself, I would get rid of these indicators. But since I'm doing on air and I get questions asking what it is, then it's been a nice tool for me to explain it a lot easier. And then ATR, if you didn't know, it's an average true range. So this is ATR 14. This takes the last 14 candlesticks, and it says what's the average range of those 14 candlesticks. Right now it's at 17.8. So that means each candlestick on average from high to low is about 17.8 points on the Nasdaq. And this is average, right? Some big, some small. It just helps me gauge volatility, like how volatile are these markets? We never traded currencies. All right, let's see if we can get in long gold. Long the gold. We didn't get all the way down there. Buy the dip. Buy the dip. Let's see if there's going to be a buying opportunity here in the gold. Of course. Joe Black, that's my theme song right there. That's my motto. That's okay. We have new traders joining in, and traders who's never traded before. We have people tuning in for the very first time. By the way, who's here for the very first time? in slow markets. Anybody in here for the first time ever? Try not to lie. Will I be able to tell? Probably not. But first timer, me. Are you really a first timer? Or are you just saying that? I never know. Second time. Okay, great. My first one was earlier today, so kinda. Well, welcome. Got 3 years. Does that count? Nice. First time. A lot of new traders. See, that's why I don't mind explaining things, even though sometimes it might feel like I'm repeating it, is because there's new people tuning in, and I love that. Yeah, Andrew. First time for today's broadcast. First time with your dad teaching you. Welcome. You don't even remember. You learned so much. Yep, we all started somewhere. I always wish, man, if I had something like this when I was learning, I would have loved it. Not needing to pay for some person online who's selling like books or courses or discords. I could just get online and turn on the YouTube, not have to pay. No need to pay, right? Most of it was self-learn, Giftshark. A lot of it was, unfortunately, self-learn the hard way. And then we have this trader meetup in Chicago. So next week, the team's going to Chicago. Well, the team's out of Chicago, but we're doing a trader meetup here in Chicago next Wednesday. It's coming fast. Me, Jay Barron, they're flying in. Hogue, the team's going to be there. It's going to be a good time. I'm going to have so much fun. And it's only a week away. Only a week away. I'm going to close my eyes and wake up one day and it's already going to be here. Does Woody's have frozen peas? I don't know. Learn on Combines, sim account. Yes. Yep. Please. Oh, everything is going to be recorded. But the people who show up, they probably will get to see a little bit more on the inside information. Come to Pinehurst. Not everybody golfs. I do. Some of the on air, like me, Jack, Mick, MP's just, I think he got into golf last year. JD. You'll see how shy you get in person. Dance on the table. Andre said he's doing karaoke. I think Jay's gonna join him. You'd love to make the trip down to Chicago? Next Wednesday. Joe Black. Hey, there's going to be more. There's definitely going to be more. I'm not seeing too much left going on. And we're coming to the end of class. Nasdaq still holding. We're still holding the lows. Tomorrow's going to be interesting. Remember, once again, just a reminder, tomorrow morning, 7:30 Central, we have inflation data, core PPI, and we also have jobless claims. So tomorrow, we're going to see a lot more volatility around that time. Heck, we might even see a lot of volatility during the London session with all these speakers with, Aaron trades during the London Open. And then during the Eurozone. Markets are settling down just a little bit. I took 2 trades, 2 bangers tonight. Man, slow market scalping this has been, it's been gold for, yeah, it's been golden. It's the golden. I think I'm 4 for 4 on slow markets with this strategy. What, I take 2 trades last night and both were banger. I don't know. My memory's shot right at this point. But yeah, so far so good. Let's see how tomorrow does. I'll scalp. I'm still gonna be doing this. I made the decision. Look, I'm up $107. Or we could talk about points, right? Dollar matters. Dollars mean less when you're figuring out a strategy and testing a strategy and preparing it. This is me dipping my toe in the water. $107. That pays for a nice dinner for 2. And so I'll be doing the same thing tomorrow morning. You know, still testing this in the live account tomorrow. Does that go hand in hand? Testing live account. I'll be dipping my toe in micros in my live account. How about that? I don't like the word testing and live account. Those don't belong in the same sentence. But yeah, dipping my toe in the water with micros. That would be the debuting. I'm debuting this in micros. I don't know. But yeah, I never want to say testing and live account ever again on air. Internet's forever. So yeah. Dinner for 2 at McDonald's. 107? Nah, that's a. Maybe I just go by myself to like a 5-star. That's like one nice, extremely 5-star restaurant for me. Says Baron is trading in the shadows. Are you referring to Baron wanting to do some sparring in Chicago? If Baron, yeah, we'll see. I'm gonna have Baron on tomorrow night. Baron's gonna join me tomorrow night. We'll talk about it tomorrow. Yeah, if Baron wants to spar. I don't think it would be sparring. It might be like 1 or 2 minutes. I will not hit hard. I think that's completely. I'm a sportsman first. Sportsmanship comes first. Baron is a friend. I've been getting to know him a lot more, right? He's been joining me a couple days a week, and the last thing I would ever want is for us to go to Chicago, get excited for Chicago, and like the first day, one of us gets like a black eye or something. But even if he hits me first, Kevin, nope. I'm. If we go there and he wants to spar, and I don't mind playing around with him, but he could hit me first if he wants. I would not go 100%. That would be very inappropriate for me. I don't know if inappropriate's the right word, but if you've boxed, anybody in here who's boxed, you know exactly what I mean. Yeah, if you've boxed, you know what it is. You never want someone who might be new and be put in that situation. But that's not gonna stop it from having fun. We're gonna have some fun. I tell you, if he does, yeah, we'll talk about it tomorrow. Baron's gonna be on with me tomorrow night during slow markets. It's gonna be fun. Yeah, and then like I said, Jay, we're gonna be playing basketball. Maybe we could get Baron to dunk it for the first time. Baron's a tall person. He's a tall dude. He's what, 6'6", and he's never dunked a basketball. That's mine. That's my goal. Jay, me and Jay, that's got to be our goal. See if we could get Baron to dunk the basketball. Yep, Gift Shark. Yep, doesn't matter what sport. It'd be like, now this is not the right comparison, but if you see somebody like, I'm trying to think of a good comparison. Yeah, it's hard to. Yeah, I want to see Baron dunk the basketball. That's what I'm excited to see if we could get him to do that. We should live feed it together. Should we go live? I don't know. Jay filming it, egging it on. Jay sitting there watching us spar, or Baron filming me and Jay play some basketball. Live feed it. You guys will watch the live? I don't know. I'm sure it's gonna be recorded. Like, oh man, the teasers. Maybe I'll post a few pictures. Yeah, he's 6'6". I want to see him dunk it. Yeah. Dunking is hard, yeah. I better use my size advantage on Coach Jay. Coach Jay, he's a basketball coach too. He knows how to play basketball. So, I don't know. Coach Jay's probably going to just destroy me in basketball. Gift Shark. Primarily for the love of sport. I love boxing. I love the sport of boxing. I love the art of pure boxing, and surprisingly to some, I'm working towards an official bout. Amateur, of course. Yeah, Jay's a shooter. I could see Jay being a shooter, and he's probably quick. Jay's probably quick, and has handles. So I think that's where we're gonna end it. I think that's where we're gonna have 2 trades tonight, one on gold and one on the Nasdaq, and both worked out beautifully. So, all right, I'll see everybody bright and early tomorrow morning. If not, tomorrow night with Baron, and maybe we'll talk more about sparring. Yeah, it'll be fun. It'll be fun. Take care, everybody, and I will see you bright and early tomorrow morning.
Welcome back, stream. Welcome. Okay, let's have a look at the trades that we have taken today. Look, I have been on the wrong side of the market, obviously. If we just look at, like, come on, let's just pause. Let's just take this back and just be a bit transparent. Okay, but market, look, let's say here, obviously bullish. Boom, now it's starting to go bearish. Okay, wait, and boom, bearish. Okay, from here on out, I should be taking shorts, I guess. So, even in this area, I should be taking shorts. So, as you can see, I've been taking longs. So, I've been in the wrong direction of the market 4 times today. And I'm going to jot all my losses. Yep, this is today. And yeah, so I have been taking way too many losses. Begs the question, do I stop the trade entry? What am I doing? Guys, do I stop trading today? Am I longing the wrong way? You feel me? Yesterday, what did I have? Yesterday I had some longs. Yes, I had 2 longs, didn't I? There's a long and there's another long. Oh, long and then short. Okay, long and then short. And then the short is the one that won. Crazy. Loss. Yes. Loss. So. Yes, do I need to stop doing that today, guys? It is Thursday. There's no volatility. We are still in June. 1, 2, 3, 4. The next one, it will be over traded. So let's have a look. Let's just zoom out. 3 minute. What are we looking at? Okay. This could be there's a few things. It's a bit choppy. Let's have a look at it holistically. Okay. Let's just take this back. Let's just take it back. Oh. Just have a look. Market is bullish. Okay, market is bullish in this moment right now. Market is bullish. Okay. So market is bullish. Boom. The 30-minute market is bullish. Yes, we've made a break of what's it called? Make a break of structure, but we are in pullback. All right. 15-minute bullish, and we just have hit a protective low. So this is a cause for potentially looking for longs now. Everything else on before, not really ideal. So now that we know what we're doing, okay, potentially taking longs here. We have hit a protected low. We want to look for a change of character. We've got inducement, so there's boom, there's a protected low here. So if we look at the channel, so there's a channel. Here's the protected high. Broke that. We've made a break of structure. New protected high and protected low, because this is the low point of the opposite side of the break of structure. Okay. This is our protected low. We've just tested it correctly, perfectly, lovely, and now we want to wait for lower time frame change of character before taking a trend continuation. So now that we've sort of broken this lower time frame change of character, this internal protected high, and swept. There's two things. One, we want to see a break of the internal break of this, the internal change of character, come down, or this one come down. So realistically, we can look for a long somewhere in this range, or this range, bang, this range, to take it up, because it looks like it's been respected on that time frame, and this is peeling everything away. So now that we can see this, obviously, taking a long at this area, who could have forecasted that? Really, needed a change of character, need some confirmation. So realistically speaking, if we wanted to take a yes, So yeah, now we've had that. Now I'd like to take 30-point stop loss, something a bit more less risky. So yeah, that is what we're looking at. So I'm going to stretch this out. I am going to put a little section here. I'm going to actually highlight the actual 15-minute point of interest. So what are we saying here? I'm going to draw a box from the wick of last relevant structure to something that was just to the last sort of mitigated price after that. So this one, this space here, mitigated, tapped into. 15-minute demand. POI, I want to say that, save it as. Great. Let's look for longs, you know. Let us look for some longs. I would like to see price come back here. Let's look at like a solid 2 risk to reward, risking, you know, whatever amount. Something like that. And yeah. I am going to make lunch. For the time being, chat, you can watch this video as we wait for petrol. As we wait.
Confident in that trade. I was gonna go heavier. I think I went like 5.5 into it. I was gonna go 10 million in it.
We have the founder of the lab, a true 7-figure trader, over 2 million payout on Apex and a single payout, trader Kane. On top of that, the founder of TradeZella, a verified 8-figure trader, Umashra. To top it all off, the one who holds the Apex payout record, over $2.5 million and $4.5 million in his prop firm trading career so far, JadeCap, aka Kyle. Hundreds of thousands of traders out there truly do watch your guys' journeys, take value from you. And what would you do today to try and get back into the position that you're in today? And we'll start with Kane.
If I had to start over,
I don't care how good you've been trading for 6 months. Unless you have 2, 3, 4 years under your belt, I don't think you have the real raw experience to be known as a good trader. Prior to this Tesla trade, my other biggest trade was in 2021. And I took that trade and that ended up being such a big trade for me. And that kicked off really healthy momentum. And that going into my next thing that we were talking about before, identifying A+ setups. I think when I have A+ setups, it starts from 2 components. One is
but there comes a point in the market where I feel like I'm oversized for the size of the market. Sometimes I can quite literally see my order in the book, and I'm the largest order in the book for like quite a way. They're talking about me right now. They're like, this guy doing this, like he just won't leave us alone. He wants to go short, and I'm just like, okay, I just let it go, and then the market moves.
what are you trading?
Thank you.
Well, how much size?
Sometimes up to 100 contracts. Yeah.
So even the ICT thing, I want to talk about that myself.
You've been waiting for this, haven't you?
No.
Clip it.
The ICT stuff, right? Do I know if he's a real trader or not? I don't know.
One singular algo that controls them all.
That part I don't think is true. What are the 3 things you look at to break down A+ setup and non-A+ setup?
Yeah, so I think higher time frame narrative has to be there. And knowing that the market structure is telling you a story. So I think the biggest thing is
Number 1 podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Before we get into this episode, guys, I just want to ask for one favor. 52% of you aren't subscribed to the channel currently, so if you can just hit like and subscribe right now, it will help us more than you will ever know. It will help us bring you and continue to bring you the best 7- and 8-figure traders from around the world. Thank you. Now let's get into this episode. Welcome everyone back to the Words of Wisdom podcast. We are back once again and still the number 1 trading podcast in the world and the fastest growing, thanks to all of you and our incredible guest. Talking of which today, this is a very, very special episode. Came out of nowhere, but but I am so excited because the traders we have with us today are verified 7- and 8-figure traders. But not only that, they are true inspirations to hundreds of thousands of traders out there who are watching right now. And my job today and my mission is to find out the processes, the systems, the thought processes that make them the traders that they are. And most of all, I'm going to start with a very particular question that is to get you the most value. And I'm so excited. So without further ado, starting off, we have the founder of the lab, a true 7-figure trader. He had over 2 million payout on Apex and a single payout. He actually took, if I'm not mistaken, I think it was 30K, 40K.
Yeah. Go on.
God damn, this guy.
Yeah.
Was it 30K?
From
When you did to a million, was it 50K?
oh no, it's 130.
100 probably. 30. That's stable.
So nice. Yeah, that's good. Yeah.
That's fucking dirt.
Yeah.
Why did you choose 130? Why not just 100?
We'll go into it. Let's do it again.
Exactly.
Or a million.
130. Yeah. 1.5.
So he also took $130,000 to over $1.5 million. It's the one and only Trader Kane. On top of that, we also have a very special edition because originally he wasn't meant to be here today, but somehow he made this happen. The founder of TradeZella, a verified 8-figure trader, the one and only Umar Ashraf. And then to top it all off, the one who holds now the Apex payout record for over $2.5 million and $4.5 million in his prop firm trading career so far. It's the one and only Jade Cap, aka Kyle. Thank you all for being here today. I just about got through that intro, but there was so much to reel off, and we're so excited for this episode. And like I said, I'm going to start off with a particular question for you guys because it's not a stretch of the imagination. It's not trying to inflate things. Hundreds of thousands of traders out there truly do watch your guys' journeys, take value from you, and I think a large part of that isn't just all the value and the results that you've shown. But a large part of that is because I believe the traders see themselves in you guys. Like at some point you were in their position and you were able to transition, not only transition, but really hit the levels that they want to hit. And so my starting question really is, if you were to start today and you look at the landscape of the trading industry, all the different things that are available, both the positive and negatives, like what would you do today to try and get back into the position that you're in today? And we'll start with Kane.
Thank you. Appreciate you. Thanks for making this happen. What would I do today if I had to start over? I think, prop firms today make it so accessible to scale in the market, being trading market, that it would logically be the place to start, right? You have a cap downside on the basis you're not just buying evals and blowing them. You have a cap downside and a pretty high capped upside, right? Like there was obviously a cap at some point. But yeah, I mean, if that's kind of where I would grind my teeth down. If I started again today, knew nothing, I would start there. There's obviously a journey that you can go on that route, but I think eventually the idea is to obviously move to trade live, right? Like hence what we all do now, and it's moving into that market is where like you go from playing a game a little bit, right, trying to beat the system, to then actually trading, and that's just the reality. You build a model, you build a system, you develop the consistency and the edge, and then you step into the real world. Really, it's because the market can humble you really quickly, but sim is a completely different game, and we all know that. So yeah, that's where I would start, to be honest with you. I think scaling a live account, I know some people are for it. The journey is way too long, and you can really get a good head start there with the props. There's good and bad, but the good is obviously there from a capital perspective.
Definitely. So, yeah. I know that's probably a topic that we're going to go into in terms of all that sim environment, the prop firms that are available today to that live, because that is a transition that both you and Kyle have taken now. And then we have Umar, we will come to next, where that prop sort of opportunity, if you will, if you see it that way, wasn't available when you started, and kind of been a live environment from day one. So what would your thoughts be?
So I'm not really the biggest fan of new traders going into prop firms, right? The reason I'm not a big fan of it is because, number one, I feel like trading is hard as it is. And I feel like naturally, if you take 100 people and you put them in a slot machine, 98, 99 of them are going to treat it as a slot machine, right? Or they're going to treat it like gambling. So they'll buy a challenge. Oh, if I fail, I'll buy another one. Oh, if I buy a challenge, I'll reset. And I think early on, those are the habits you don't need. And it's very easy to start developing those habits. And I've seen it happen, right? I've seen people start burning 3K a month, 4K a month on just reset fees, you know? So I think if you have, let's say, 1 or 2 grand, put that into an account, put the least amount of risk possible there, and just trade for 6 months and just learn the skill, right? Obviously, emotions won't play a role because the money isn't large enough for you to feel emotions. You're not worried about like your trailing drawdown and max this, max that, all of these other rules. You're just focused on the skill for 6 months. And I think if you focus on the skill for 6 months, you identify your problems, your edge, and all these things, then maybe if you want to go to a prop firm route, sure, kind of get it. But I think starting out, I probably personally wouldn't touch it. Yeah.
Yeah, for me, I think I would kind of go back to like what actually made me a successful trader. And I think a big part of that is honestly having the edge first before you pick up a prop firm challenge. Like I traded for 10 years before I started trading prop. I think prop actually made me a better trader because it actually kind of gave me those guidelines of not risking too much. But again, there's certain rules that make it much harder. The risk management side, I think, makes you a better trader. If you can find ways to like trade within those rules, I think that's important to understand because again, it's a game, but it's a rigged game.
Yeah.
But the problem with personal that I faced, at least when I was coming up, was there were no rules. So nobody was stopping me from risking 10% on a specific trade. And I know you mentioned like your emotions get taken out of it with a small amount. I guess, you know, me as a broke person, my emotions were still there. So even with like a $5,000 account, my emotions were actually probably higher because I didn't have any money in my bank account and all the $5,000 that I had was in my trading account. So I think building a nest egg first is probably one of the most important things. Like have an emergency fund where you can, you know, fund your lifestyle for 6 to 12 months and actually take it seriously. That way the money's not a pressure. And then actually build an edge. Like most of these firms have trial accounts. You can trade the trial account pass like 10. I know people that have made a challenge to try and pass 10 of the trial accounts before they even buy an evaluation fee. So if you can do that, if you can do that 10 times in a row, all right, go for the prop account because I think, like Kane was mentioning, it kind of springboards your capital, which is what most people are really looking for.
Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZella. TradeZella is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a forex trader, whatever trader you are, all you do is connect your trading platform directly with TradeZella. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZella does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, backtesting, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZella, so use WOR for 20% off your yearly subscription, or RIZ10 for 10% off your monthly subscription. The link is in the description below. Don't know where the market's going next? Stop worrying about your trading. Just get informed on exactly what's happening in the markets and what to expect. From forex to futures to stocks to crypto, be on top of it all. That's why tens of thousands of traders are subscribed to Market Journal, a free newsletter that allows traders to keep up to date with the markets every single week. Remember, an informed trader is a profitable trader. It doesn't matter if Trump tweets, AI stocks are pumping, or if Bitcoin drops out of the sky. Market Journal has you covered. Join for free today using the link in the description below.
Definitely. Like to take it back to you, Kane, I know, you know, I think the essence and the mindset is in terms of leverage.
Yeah.
Right. Because, you know, having that edge first, I think is, you know, we all know if you're going to be, whether it's prop, whether it's personal, whether it's investor capital, even if it's traditional prop, what it all comes back to is that edge. Right. And in terms of developing edge, like what would your thoughts be in terms of where traders should start there? You know, because in this landscape we're in now, the benefit is that we have so much access to information, technology, the barrier to entry has come lower, which is also a great thing. But again, a lot of those things I just mentioned also have a lot of negatives to them, right? You know, information overload. You have the barrier to entry being so low. It's kind of a negative because a lot of people can just throw capital at something and not really sort of develop the patience to, as you say, like build your capital base and your emergency fund, etc. But like, if someone was looking to develop their edge, what would your thoughts be around that?
Yeah, I kind of defend what I said, right? In terms of, I think trading the market is the best way to develop an edge because, you know, we all have some profitable systems and we could give anyone on the street, hey, look for this, do this. We can sit down with them for 2 weeks and teach them it. But you've got to do the reps, like, you know, like the emotional whipsaw of being in that trade that comes close to stop loss, close to TP, back to break even, like just being able to like over time negate that is half of your edge, right? And the risk management and scaling and doing all those things. And I think you have to have some skin in the game. You have to have some emotional attachment to it. You know, taking emotions out of training it's impossible. Like it's just, you know, we're not robots. So you have to have that. But over the time, the swings get bigger in both directions. Facts, like from a number perspective, and the emotional capacity to do that also gets bigger. You know, I can sit in drawdown that I probably would 10 years ago I would have cried about.
Yeah.
You know, like genuinely cried. Like, and I can just sit in that drawdown now, and if it takes me out, it takes me out. And I can also sit in the opposite side. So I think developing the edge is important, but actually developing I guess, all of the things around your edge actually are half of the edge, right? In my opinion, my edge is being able to do nothing with my trade and just letting it play out. Where some people will over manage that trade, get stop break even before the move, and it's like, okay, fine. That happens to me sometimes as well. I'm not perfect.
I think that's a good point that you brought up. The edge, an edge doesn't just have to be a strategy, and a lot of people think an edge is like a strategy. My edge is this particular strategy. You can have an edge around like emotional self-control, your execution, the way you handle losses, the way you're able to like sit on your hands. These could be your edges, and I think identifying that early on kind of becomes a little bit difficult because that's where your reps come in. Once you have more and more reps that you execute in the market, you start to pick up like, oh shit, this is what I am good at. This is what I'm not good at. I'm very quick on my feet. I can execute at a high level. Oh no, I can't execute at a high level. You know, I'm not a quick thinker, so I shouldn't be scalping. Maybe I can day trade. Maybe I should hold my trades longer. Maybe I can't take 10, 12 trades in different directions because I can't switch context really fast. So I need to be on one side and be able to slow it down afterwards. These are things you start learning after you start putting the reps in.
Yeah, I think my as far as edge goes, like I don't think I really had any strong suits when I came into trading. Like I was pretty bad at trade management, execution, emotional control. All of them I was pretty bad at. And I think reps in the market is so important. I was never really one to back test because nothing replicates a live market environment. Like you can't be in the same economic environment. Like the whole narrative changes. Like unless you can go back in time and like figure out what the actual environment was like back then, I don't think you can really replace that, you know, in a live market. So I think backtesting has its uses to like try and build an edge and try and fine tune like the trade management and stuff. But I think being in the market, like getting the reps is the most important. Because when I first started trading, like $50, you know, kind of made my heart palpitate a little bit. But now, when you start building that up, you kind of have to do it slowly though. Because I think I tried to scale way too fast. Like I would have a massive trade, like double my account, and then try and like 4x the size, right? But instead, make it a challenge to like stick within a consistent size, at least for like a quarter. Do that, see how your emotions go, because you're going to go on tilt, you're going to make mistakes, and that's like really the only way to protect it. And then if you can do it at a specific size, then maybe that next quarter kind of graduate. And I think it's just more about slowly graduating and not trying to do it too quickly.
Yeah, and in terms of, is it more difficult or easier to trade now? That's what I was saying before. I feel like there is a pro that we have a lot of access to information and there's like access to capital, but it's like you don't know what information is correct. You have people that just started trading 6 months ago and they're like these gurus with the following, and people start giving the wrong people followings in this space. And in this space, it's like, I don't care how good you've been trading for 6 months, unless you have 2, 3, 4 years under your belt, I don't think you have the real raw experience to be known as a good trader, right? I always look at traders and I define if they're good or not by their drawdown period, how they scaled up, how they handled certain periods in the market when the market switched. Like, for example, I know so many traders in the past 2 years that have done really well. Trump came into office, boom, account's gone, right? So what happens the last 2 years? What happens the last year? They don't know how to adapt to market conditions. They don't know how to adapt to themselves. And these things kind of blow people up. And it's like, I don't think people that are trading for 1, 2 years should be gurus. And I think it's a disservice to others that want to get into trading. They learn from these individuals, they learn the wrong things, and then they lose money. And then they're like, oh shit, it's trading. And it's like, no, you're getting the wrong information. So I feel like now That's the negative, where back in like 2012, 2013, I think there were like 4 people, and all the 4 people out there, or 5 people out there, had 8 years, 10 years of experience. So that's kind of the negative about now, I think.
No, definitely, because I was thinking about this just literally yesterday. It was a case where you have these guys who, you know, have these followings, and they're able to buy certain lifestyle elements, and they push the lifestyle as if trading paid for this, but in reality, their subscriptions are paying for it. Now, putting that to one side, the real issue with that is there's many issues, but the real one, I think, to your point, is it creates this false expectation of like, oh, you know, I can buy this, you know, let's say a car, I can buy this car from trading, you know, in this short period of time, when in reality, you'll see traders who, you know, back to your point, like 8-10 years in, who then have those cars. That's fine, right? Because they've actually done it, versus the false expectation and almost the fake expectation of, oh, you know, I can do this in a short period of time, and it fuels this. And it's a problem because of the expectation. And then when the trader fails to do it, they then get really hard on themselves. Probably that's where the jumping strategies, or quitting, you know, that's a reality. They'll quit or leave the industry, but that's when they'll start to jump, because okay, that hasn't worked to achieve this result, and the result is something that isn't really centered around trading. Like true trading isn't centered around that as the result. It's your processes, etc. Just taking it back for a moment in terms of the edge, and sort of earlier on into your individual journeys, and we'll start with Kyle, just to mix it up a little bit, yeah, not to throw it on Kane every single time. But in terms of early on, when you were building those reps, like, were there moments where you would put in, you know, start building those reps, something would happen, you know, maybe go on till, or, you know, have sort of a negative experience, and then you would stop, pause, come back, build those reps? And the reason I ask that is because that's something I personally went through, but I know a lot of traders out there who go through that constant boom and bust cycle. What was it, though, in the end that allowed you to stick through it, to continue to build those reps, which then led to building the confidence and that sort of momentum building?
Well, I think a part of it was like, again, like you were saying, unrealistic expectations of trading in general. Because like when I first started, props weren't around, so you didn't see people on social media posting $20,000, $30,000, $40,000 payouts. That wasn't really a thing. People were just kind of trading their own personal accounts. And you know, I went through a lot of cycles of me learning a couple different things. Maybe it was a new system. I would go through, you know, a quarter, it would do okay, and then I would blow up, and then I would get really disheartened by that and go find some.
What year was this?
So I started in 2011.
Oh, damn. Okay.
Yeah, so it was like all forum based. The stream of information was much slower. So like somebody would post a chart, and I would see it like 4 hours later. I'd be like, oh, that trade looks good. Let me get into it. And at that point, like the fill price was completely not even the same. So I think right now there are advantages to the flow of information, but there's also disadvantages. Like there's too much information out there now. So I think it's hard for people, newcomers, to like really discern who's real and who's not, and what works and what doesn't. But really, that's the journey that every trader goes on. Like even back then, before social media, you still had to do your own due diligence and try and find something that resonates with you. So I don't think anything's really changed from back in the day till now. I think traders, you know, they need to put themselves in the right position, in the right mindset to understand, like, you're going to war almost every single day with the markets. Like it never gets easier, to be honest. And when you get to a certain level, you're going to want to size up and scale up. And those same challenges, they come back again. You know,
they burn more.
Yeah, exactly. And I think
they burn a lot more.
Exactly. They do hurt a lot more.
Yeah.
But like the same emotions come up. You know, when you go on tilt, it feels like your edge goes away and the market's going against you. You're going in a drawing, like this trade sucks. Like I don't know what I'm doing. But it's just part of the challenge of trading, honestly. Nothing is ever like perfect. Like it's never like smooth sailing, to be honest. So I think you just get more comfortable with being uncomfortable.
Definitely. Was there a period though that was kind of like the first time where you really built those reps in? So rather than boom and bust, you actually continued to trade and continued to sort of build that momentum?
Yeah, honestly, and it was like it was more so I blew a lot of accounts and I just got tired of doing it. I think a lot of traders will probably go through that. Like there's a lot of traders that will round trip a ton of money. And, you know, I think you kind of have to hit that rock bottom period where it's like, all right, I'm going to change forever. And like, I never want to feel that gut wrenching pain. Cause I'm sure all of us probably have had those trades where it's like cold sweats at night, can't sleep. and you just feel awful about the risk that you put on because you just took a massive loss. It was against the rules, so you feel terrible about it. And the only way to change that is like really be disciplined the next time you're stepping in the market, because again, it could happen again tomorrow, right?
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, Alpha Prime, the first of its kind in the industry. Now, evaluation firms have been in the industry for the last few years and done absolutely phenomenal in terms of its impact for traders. As you can see here, through Alpha Capital and Futures, so many payouts to so many traders across the world. But now, for the first time, there is an incredible route for traders to become professionals and to trade live capital, and that's through Alpha Prime. So let me quickly tell you how it works. You could just buy a challenge on Alpha Capital or Alpha Futures. Doesn't matter which one. So Alpha Capital, you have phase 1, phase 2, phase 3 challenges. On Alpha Futures, you have standard and advanced plans. Whichever one, purchase a challenge. Show consistency, build your track record, and then you can be invited to Alpha Prime. Alpha Prime, you will get access to live capital. You will get access to risk management and resources at a professional level. You will have a salary as a trader and access to trade on live trading floors starting here in London. This is the first of its kind, where an evaluation firm is finding talented traders and then backing them with live capital and creating a route to professional trading. I am very proud to be sponsored by Alpha Prime. The links for both will be in the description below. Alpha Capital and Alpha Futures, use the code RIZ for 20% off all challenges. Link is in the description below. Now let's get back to the episode.
I think that's that classic saying, right? When the pain of staying the same is greater than the pain of changing, then you'll finally change.
Exactly.
How about yourself, Umar? Like when you think back, what was it that allowed you to consistently put the reps in versus, say, that boom and bust cycle?
Yeah, so two things. Number one, to Kyle's point, I didn't get until year 7 or 8, right? Until I felt like, okay, I can do this again. What I mean by that is until like year 7 or 8, I swear every year I would like make money from the markets. I'm like, fuck, can I do it again? Did I get lucky? Like every single year until like it was like the year 7 or 8. And that's there to show people that it does take a lot of time. And then in terms of like the confidence, like for me, it was like 7, 8 years of reps, right? I'm doing it over and over again. And those reps happen after I went through like bad drawdown periods. I went through periods where like genuinely I was like, shit, I did get lucky for 5 years. I've been getting lucky year to year, year after year after year. I've had periods where every trade I've taken for like 2 months, I kid you not, every single trade was red.
Yeah.
And I'm like, shit, I should have just taken opposite trades, right? So those reps build up. And once those reps build up of the bad stuff too, you start building this like level of confidence. And that level of confidence, I think, does take, well, for me, it took 7, 8 years. I don't know how long it would take someone else. But early on, same thing, you know, to Kyle's point, I have countless stories where I think I was 21 and 20 or 21, right? I had about 400-ish in my brokerage account. And I remember I took a big swing in a solar company. It was called SLTD or something. And I put $211,000. And, you know, if you're like, why 211? It's because I bought, I think, 50,000 shares or some amount of shares that amounted to that much. And I took that trade because I was like, okay, if I buy this much shares and if this stock goes to $10, I will make this much.
Yeah.
So there was no thesis behind the trade. And it was just kind of like, hey, I want to make this amount. In order to make this amount, I need to take this particular trade. And the
Without even thinking about the downside.
there's no downside because there was no way this could go down. There's no possible way. And then I used to go on stock twits, right? I don't know if you guys have done this. You go on stock twits and everyone's like, this is going to 20, this is going to 30. And I'm like, you take your calculator. Yeah, you take your calculator. You're like, okay, if it goes to 20, nah, you know what? I'll take 10.
Yeah.
But you start playing this weird game. And I remember I took that trade and I woke up one morning and I got a notification and it was like, SLTD has filed for bankruptcy.
Oh,
So quite interesting, went to zero.
Yeah, I'm like, shit, how, right? You know, and that's the moment where, you know, it really clicked for me, and I was like, I can't start having outcomes of like, I want this trade to do that, I want this to do that. It's more like, what is the downside I can control? What are the things that I have in my control, and what can I do to make that kind of happen? Instead of looking at this needs to go to that price, or I need to make this much, or whatever the case is. And that was like one moment for me that kind of kicked in.
Yeah.
And at that point, by, you know, mind you, 3 years in, 3.5 years in, or whatever, I have a large brokerage account. However, that account came to that level by me doing those stupid things.
Mm.
That's my second point, where if you make stupid mistakes on a small level, right, and you start taking dumb trades, which I did to kind of grow my account, those trades will blow up one day.
Yeah.
So for me, losing half of my account in one single trade, I'm like, okay, well, I've got to this point by taking these dumb trades, but I lost half of my account. If I keep doing this, maybe I might make another 200. Maybe I might lose everything. So I need to start trading the right way consistently, not just 1 month I'm trading right and then I go into like this downhill tilt of wanting to become a millionaire. Because early on, I think every trader has a goal of making 100K or making $1 million, right? And it's like, you'll do anything to hit that, and sometimes anything is not the smartest thing to do, right?
Whenever I get like super overconfident, that's usually when I get burned the most, to be honest.
So what I do now, when I have like a really good month or a really good 2-3 weeks and I feel it happening and you feel like this like trading god, like it's such a weird feeling. I'm like, all right, I'm not trading. And people are like, why are you not trading? You're trading so well. And I'm like, yo, I've touched every trade for 2-3 weeks. It's been green. My ego's telling me to size up. And I feel like there's something or somewhere I'm blinded.
Yeah.
So I'm just going to take the week off and I'm not going to look. Because in the first 7-8 years, I would have a big month. Boom, in 3 days, all gone.
Yeah.
How
do you find that like breaking point? Because for me, it's always, sometimes it's like a fine line. Like when you're hot, you want to stay hot. But it's like at some point, you're going to get fatigued.
Yeah.
My mental gets fatigued. I just get tired and lazy on the charts. I stop following the routine because it feels like it's too easy, or just basically printing money. And I think when I start breaking my routine, that's usually like the first sign that I'm going to kind of probably have a bad day.
I think for me, it's what I've seen in the past 4 years of trading minus like the past 3 months. I think the past 3 months have been very different. The market would trend or move in one kind of context or one direction, right? It would have one level of sentiment and you can trade it for some time, but that sentiment will switch.
Yeah.
And I'm like, okay, I don't know when it's going to switch. It's been 3 weeks. It's been 4 weeks. It's been 5 weeks. We've been trending on the upside. I've been able to capture the moves. I don't want to get caught with a context where the market starts switching sentiment and I'm still in a similar direction. So let me slow it down. And if the market switches, I can adjust to it. Because also when you're trading with a lot of size, I don't care what no one says, you get blinded sometimes.
Yeah.
You're so blinded because you put 100, 200K risk on a trade. Naturally, your brain wants that trade to do well.
Yeah.
And you start looking for those signs where it's going to do well.
Go to like every time frame.
Yeah. And you're like, okay, this is it, right?
Oh god, the weekly's so bullish. You're entering my 5-minute chart.
Yeah.
Holding for a day.
Yeah. And then that starts it starts to blind you. So for me, it's like when I start feeling that, I'll kind of step away. But I think the last 3 months, because the sentiment has been like insane, we get a market that rallies 1 week. Overnight, we start seeing the biggest sell-off, then the biggest move up. I think at that times, if you are skilled enough to be able to adjust to that, I think you can kind of play that a little bit more aggressive.
Definitely. And just to finish off, Kane, like same thing in terms of the reps, early on, what allowed you to sort of push through and make that transition to putting those reps in long term?
The thing for me is most of my reps were done in crypto. Like I did a lot of years trading crypto, and it's like, I've said this a few times, you could be up at 3 a.m. trading a coin that doesn't actually have any utility and it's just doing crazy numbers, right? So, all my reps are already done there. And because there's so much to trade, just this Bitcoin's not doing something, I can go to Ethereum. If Ethereum is, I can go to some random altcoin that's doing something somewhere else. So I was able to get the reps in most days. And that was good and bad. It was bad that like I was always in the market, but good because it allowed me to really fuck up so much and make a lot of money and lose a lot of money, right? Like, but that's where I got my reps. I have this ability to be like hyper focused in trading for a period of time, but on the tail end of that, I hyper burn out.
Oh yeah.
Yeah.
Like I just can't even look at it. Like, and to mirror what these guys said, in January, I had an amazing run. Like, it was phenomenal. And there was, posting on Instagram, it was like, okay, my risk at the moment is a house.
Yeah.
Like, this is in my head, that fucks with me. Like, and it really just, like, no matter how I play that, no matter how well or how good I'm doing, I could go and buy my mum a house right now.
Yeah.
Instead of putting a trade on. And if I lose, it's the same effect, So that was kind of the thing for me. And at that point, I can really start to feel then the mental fatigue is like the blinkers are coming off. My hyper focus is going into more like hyper burnout. And that's where I really make really dumb decisions. So it's like being able to just, you know what? I'm going to take this out. I'm going to put some risk on, but risk that is nothing compared to what we were just playing with, and just let the market do its thing until I start to get on side of the market again. But I do have this ability that when I start to win, I can just go. I can just really put like risk on, and it doesn't really bother me. And if I'm wrong, I can just go straight back. But when I get risk on, I get risk on, risk on, and risk on, and I go, and then I burn out.
Yeah.
So
I can relate to that because that was me during that whole election period. I was just trading nonstop over and over again.
Fun, yeah.
And man, at the end of it, I was like, I'm done with trading.
Yeah, I'm done.
I'm done. This is it. I'm never trading again. I'm done. My brain's fried. I don't want to speak to anyone. I do not even want to talk about trading. If anyone messages me about trading, do not talk to me about it.
Like me, I haven't really traded in the last 2 weeks, but I haven't taken like a proper vacation, and I still feel like I still need that. Like I owe myself that because I was on a run for 3 months straight, and I was trading every single day, and that's something I'm typically not doing. Like I typically will take at least 1 day a week off, but like a whole quarter of just smashing it out of the park. I think at some point, like I need to just take my foot off the gas at some point because I think some of the best traders that you've interviewed also they know when to put their foot on the gas.
Yeah.
Like they know when the market conditions are right. They know when they're not right. And I think when you're riding a narrative like the tariff narrative, as it was going down to like 16K, you make a ton of money, but also a lot of people give that money back pretty quickly. And I've experienced that way too many times. Like when oil went negative, I was running my account up as it was like approaching like 3-month highs. Could have just cashed out, but kept chasing a specific level. We were so close, and it just slowly drifted lower, lower, lower. And then over the course of like, I don't know, 2 weeks, I just gave it all back. So I think, it's super important to know like when to put your foot on the gas and when to take it off. Because I can't be a foot on the gas all year round. It's just, to me, it's impossible.
Talking about the foot on the gas, one topic that has always been a theme, especially over the last 6 months, and I believe I know the answers from you guys, but it'll be interesting to hear, but also maybe in more detail in terms of when it's important also. But in terms of dynamic sizing versus the static sizing, it seems from the sort of collection of professional traders and from different styles of trading, the one key theme that has really stood out, bar one trader, who's Jason Shapiro, but he has a very particular edge where I think his edge is really why it's so sought after is that it's meant to be like almost like a hedge in a sense. So he sticks to static personally, but pretty much everyone else has a system that is a dynamic risk sizing. And as you know, some of the traders that we've interviewed, like Lance and sort of the guys from S&B, they're heavy into dynamic. That is like one of the biggest part of the edge, and the reason for profitability is the dynamic size. But what are your guys' thoughts in terms of when you are, sort of getting that feel for the market and you're feeling the market and sort of in sync of using that dynamic sizing? How important is that to reach the higher P&Ls? We'll start with Kane here.
I think it's important, especially when like we're trading a personal account, because you have those 10 trade runs, they can make you a year. Like if you really like size cricket, they can just like my January is like it's good. Like
You're tired.
I can chill the rest of the year. And then I had a good April, and it's like okay, we take a couple of months off in between, but it's like those 2 months I could just take out the year now, and I'm good, right? So, but if I statically size to where I am now, I'm probably actually down on the year, right? To be honest, like I'm gonna be honest. If I just statically size, but if I'm trading prop firms, and a lot of people are, like you do have to factor in certain rules, and you can't just suddenly go, oh, I won one trade, let me risk double the next or double the next, because the reality is if you don't have the money to put into a live brokerage account, you probably haven't traded long enough to dynamically size. Yeah. So, there's no argument that most of the good people dynamically size, and that is up and down. Like when I'm on a bad run, I'm just like 1 micro. Let's just wait for the model to get on side. Let's play the game, get the emotion in the market. Let's put risk on. Let's not just sit and watch here. Let's track the data. And then when we start to get those winners, we can just size up. And if we take a loser, we take a loser. And if we just win, we can see where we are, and then we can just let's go. And I think everyone does that. But like I said, if you're trading prop firm, if you've not done this long enough, dynamic sizing is probably a recipe for disaster. Because trading can, you can go on those 3-4 winning trades, and that one that you size up on will just ruin it. So you have to really be able to dynamically size and adjust to that trade potentially going bad, right? So
definitely.
I think so too. I think if you are a developing trader, you should not dynamically size. Like that is not something you should do at all. I think until you can identify certain key things of like when the market is hot, when you should be aggressive, when you shouldn't be aggressive, what days you should trade, what days you shouldn't trade, how you handle drawdown, like until you kind of go through that experience for some time, I think your risk size should be at a point where if you fuck up consistently, you're not going to blow your account.
Yeah.
Dynamically sizing, like if you make a few bad trades back to back to back, you're going to be in a really, really, really bad spot. However, once you get out of that developing stage, I think the way for you to make substantial amount of money is knowing when to be aggressive, knowing what are your A++ setups. And it's relatively very similar to poker, right? If you're playing poker, not every hand is the best hand you're going to have. Not every hand is going to give you the best edge. When you get a hand that you're like, this is a really good edge, okay, now you can risk a little bit more than other hands. So trading is relatively the same thing, and just kind of, I think, identifying that. And I think that's one of the things that you can differentiate between a professional, good trader who has made real money to a trader that hasn't. Understanding how well they can, increase and decrease risk, how well they can stay in like risk on mode, and how they're able to alter those points to how well they immediately scale down, right? Because I think profitable traders making a good ton of money do that so well over a long period of time.
Definitely. Yeah, for me, it was the last skill that I learned, honestly, like the trade size, the trade management in general. So for me, like the pinnacle of my trading career was trade management. So scaling in on the right opportunities. I think most traders that are new, that don't have the right experience, they think that every trade is an A+ setup.
Yeah.
Right? Because they don't have the experience of being in certain market conditions. Like, I saw so many times, you probably saw it too, during COVID, everybody was just going long. They were just buying everything and anything. SPACs, GME, Carnival Cruises, like companies that weren't, the most fundamentally sound, they were just all going up. And then when the market condition changed, they're still used to that size. So they're still going heavy in their positions and then just give it all back. And the way that I size up, to be honest, is not like open exposure. So like if I'm going to risk maybe up to 5% on a specific trade, I'm never going to put, 5% on that initial position. I'm going to scale my way up, but adjust my stops if the trade's going in my favor. And that's kind of how I dynamically size. Is the trades that are A+, they typically move in my direction like right away. If they don't add to it. There's a lot of traders out there that probably, see the market going against them. They're like, oh, better price. Let me get in again. And it keeps going against them.
But like the discount.
Yeah, exactly. So I think, it works in some situations, but I think it probably hurts more than helps. So understanding like when to size at the right times is very important, and how to manage those stops, how to manage the emotions. Because when you start putting on more and more size into that one trade, the P&L swings get bigger. If you're trying to swing a large position, the P&L swings get bigger. And that's something that you have to experience as well.
Let's take a break for a minute there, guys, because I want to tell you about our incredible partnership with PropFirmTrader.com. Majority of you out there are prop firm traders. You're using prop firms to leverage your trading skills to be able to get more capital and to be able to absolutely change your life. So what's important to you? To be able to find the right challenge for you with the best firms and, most of all, the best prices. And that is exactly what PropFirmTrader.com does. PropFirmTrader.com allows you to compare prop firms, be able to find the best challenge suited to your trading style, and get you the exclusive best discounts in the entire industry so that you're paying the cheapest price possible for your prop firm challenge. So on PropFirmTrader.com, you'll be able to use filters to be able to do that and find the exact challenge for you, be able to find your favorite prop firms. Just look on screen right now. You can see futures firms, you can see CFD firms with offers up to 50% off, which is incredible. And you can also see Alpha Capital there with a one-step challenge with 25% off using PFT1. And there's so many.
A story, right? And being confident in placing those positions, even if the narrative is not aligned with that. So like Monday, Tuesday, it was kind of trending a little bit lower, but it's just offering more opportunity to try and get long. So I think, I think the biggest thing is knowing the right conditions to size up in. Like the tariff thing, as it's trading lower, I think it was pretty clear. You just have to have enough confidence, like you're shorting most rallies, right? Same thing with like the Ukraine war. I was trading euro on the short side for most of that narrative. Like things didn't look great over there, and I was just trying to position myself at every opportunity to try and go short. But you know, you have to be able to pick your spots appropriately. You can't just size in full size at the wrong time.
Oh wait, so what sort of stands out to you in an A plus sell?
I think I basically trade a higher time frame 50% retracement model. You know, we've gone over it several times, but when things align and then projections align, if we retrace into those 50%, and I'm just like, this either goes lower or I'm wrong very quick, I can size up quite heavily on that because my risk is so tight. That's like a really good setup for me because I'm like Kyle just said, if I'm right very quickly and I can just get risk off. And then I'm just like, that runs and does its thing. And if it doesn't run, it doesn't run. So those for me are like the A plus ones. But I think the best trades that I have are, well, this is really obvious. Like, this is exactly what I want to see. I'm not forcing it. I'm on one time frame and everything's aligning. I just click. You know,
does that mess with you though sometimes when you're like, this is so obvious, there's something off? Like that.
Not really, because I'm quite the contrarian, right? I'm typically against the grain. Everyone wants to see NQ go up because, you know, their pensions and, you know, whatever is in it. I want to see it go to zero. Like, not obviously zero because the world's got a bigger problem then, but I want to see these stairs up, elevator down moves into that 50%, then I can just let it do its thing. And I like to catch those 15-minute, 20-minute trades that, you know, spend the entire day grinding up, which kills me, you know, to be honest. Those grinding markets absolutely wipe me out mentally as well. So I like to just be against the grain. And when everyone's like, you're wrong, I'm just like, oh, this is going to be great. Because they're like, either I am wrong and I'm going to be wrong very quickly, or I'm going to be right very quickly.
But I've noticed even when you're wrong, at least you're managing the risk.
Yeah.
The stop is in profit still.
Yeah, like, I mean, you know, last week it was like, I went and got on a flight on Friday and it was like, I'm short, stopped break even, either we're right or we're wrong. And it was floating 20K. I landed and it's like, haha, you got to stop break even. I'm like, okay, your point?
Yeah, yeah.
I didn't lose money here. Like, and then again, the other day, oh, you got to stop break even and made 2K. I made 2K. Like, what's the problem? Like, okay, I didn't make 50 or 60 or 100, but like 2K, like, we can all go for dinner tonight and it's on.
Yeah. That's what I noticed. Like, using TradeZilla, I get to see a lot of my students' journals. Just a lot of traders, and it was my problem too. They just have, you know, they're chipping away, really good P&L. And it's just one day where they don't protect the downside and just wipes them out entirely. Like, either that's too many trades or too much risk. If you can get those two things under control, like I've mentioned it to you before, right? The equity curve can only go in two directions. If you can protect the downside, it's only going to go up, right? That's my biggest thing is if you learn how to protect the downside appropriately and pick your spots appropriately, like, you should come out ahead.
I'm actually curious about something from you guys. What's one thing that you're working on right now, and like a mental blind spot that you guys have? So it's like turning into me asking. I'm just I'm just curious. Yeah.
For me, it's size, right? So, I can go on those hot streaks, and there comes I you know, again, this is probably me just coping a little bit, but there comes a point in the market where I feel like I'm oversized for the size of the market, and that sounds ridiculous because, you know, as of recent, I've obviously started training on NinjaTrader, and those guys, you know, a lot of those guys are all order flow traders.
Yeah.
And like, sometimes I can quite literally see my order in the book, and I'm the largest order in the book for like quite a way, you know? And it's just like, okay, well, they're talking about me right now. They're like, this guy doing this, like, he just won't leave us alone. He wants to go short. And I'm just like, okay, I just let it go. And then the market moves. And I'm just like, I can't be that person. So it's like, it's understanding that.
What are you trading?
Thank you.
Well, how much size?
Sometimes up to 100 contracts, but like the average.
Are you putting that as a limiter or marketer?
Limit. Yeah. I very rarely market.
And I think even with a limit, though,
you market
the orders
NQ,
going through are like 1-2 contracts.
You market NQ, it will quickly just take you out. Like, if I say, like, because I'm a reversal trader, right? So I'm typically trading that breakdown. If I market that breakdown, it typically just pushes it back to the high and runs my stop. So I have to wait for the break, and then I have to limit, and then I could be the order that holds it. Or sometimes I just get run over. And sometimes, literally, I'll be watching these guys sometimes, and they'll be like, oh, and you'll just see on their order like 100, 150 cons. I'm just like, okay, well, 100, that's me. Like, what's going on there, you know? And that's just the reality. ES, whole different ball games, fucking thousands of contracts, but NQ market isn't that large.
Why don't you switch to ES?
It's too slow.
The size.
It is too slow, yeah.
Put more size on.
Yeah, but then it's just a liquidity problem. And then I've just got the broker risk of having all my money on a broker, you know? So I like to use the margin inside my broker account. You know, I could have a 50K like a 50K account and I'll throw 30 minis on. That's using 30K of my margin because my risk is capped. But to the average person, that's a lot, right?
Yeah.
But it's also, I take that loss. I can just send more money from my bank account and not have the risk of having $1 million on my brokerage. So yeah, the problem for me right now is just that size. And it's quite literally on the way over here. I was like, I've been kind of liking ES a bit more recently for that mental edge, right?
It's a little bit more stable, move slowly.
Yeah, it just grinds and it really respects numbers better. So yeah, I think that for me, outside of that, just that hyper burnout, like trying to not hyper focus for extended periods and try and just juggle it a bit better, because I just like to take these 2-week breaks and I come back and have a great run and then I'm like, we're going to break again.
Yeah,
like,
that's something that's been like the big key for me for the past 3 years. Like I'll have like a month I don't take a single trade, and like I've started disconnecting fully from the market, where like I don't pay attention at all, and I'll come back completely new, no blind spots, no anything.
Yeah.
And I see things from a whole new perspective. And like those trades I take are some of my biggest trades. Like I remember prior to this Tesla trade, my other biggest trade was in 2021, and I didn't trade for like a month and a half. And I came back for a week and a half, just looking at the markets, observing stuff, and I saw a firm, and it just made sense to me for X amount of reasons. And I took that trade, and that ended up being such a big trade for me, and that kicked off really healthy momentum. And that going into my next the thing that we were talking about before, identifying A+ setups. For me, I think when I have A+ setups, it starts from two components. One is the setup, and second is mental. Mental is important for me because I have to be able to bankroll this like sizing of A+ setups. Like I can't go into, like for me, anytime I start a new year or new month, there's typically a little bit friction for me because I'm like, oh shit, I'm starting from zero. And I like to have that mindset. Can I go into 2025 and risk 200 grand on my first trade? I'm like, oh shit, no, if I risk 200, I risk another two, I'm down 600K in like 3 trades. Mm-hmm. So I think it's the bankroll element of like, okay, can I take this risk on? Second, where is my mental? So if I have a lot of shit going on in my life at that particular point, I've learned the really hard way, just don't size up.
Yeah.
Like if my head is in 2-3 different places, I'm like, do not size up. You don't need to trade this market. You don't need to be active here. You don't need to just put on size. There's something you are missing. And I can kind of convince myself of that. Even if I'm not, there's something that you're missing. You're not at a stage to like increase size. Then once those things are sorted, my A+ setups a lot of times goes into market conditions. I think if the market's been moving a lot for 2-3 weeks and like we're at that 2-3 week period, I'm like, shit, I don't care how good the market looks.
Yeah, it's bound to go sideways.
There's bound to something to happen. Something's gonna, go wrong here. Just wait, let the market find like a fair value that it wants to kind of hang out in, and then try to dictate the next level. I also don't like to trade when there's a lot of economic events. So it's like if Powell is speaking on Wednesday and it's Monday, I'm not sizing up on Monday or Tuesday. Wednesday, I'll see what happens. Thursday, I'll look for reaction. And then from there, I'll start kind of combining that in like, okay, well, we got the big news out the way. Market has found some direction. Price is following that direction that the market wants to fight. Fine. Now I can kind of put on size on my A+ setups.
Yeah. So I think my blinders really, to Kane's point, is really just size. Because I don't think I'm surprised by anything that I'm doing right now. I think I know when I'm going to tilt. And so when I do tilt, it's not surprising to me. Like I know if I have a couple of really great days and I go on tilt down like Friday or something, I just know like that was bound to happen. Right.
Yeah. But how do you avoid that? Like,
I avoid it by knowing that I've had a couple great days and just forcing myself to not look at the markets. When I don't do that, like when I can't abide by that rule, like let's say if I have Monday, Tuesday, Wednesday, Thursday, great days. I say I'm going to take Friday off and I find myself sitting at the charts.
Yeah.
Like that's fatigue. That's me not following the rules. And it's just, I'm not blindsided by that because it's happened to me before. Right. And I think it's so important to like, say you're going to do something and then stick to that. And then, yeah, as far as the sizing, I find that when I go on hot streaks, at times it'll get out of control. Like you're on a really great hot streak, you want to just keep sizing up on the next trade.
Yeah.
And it's just like there is a boundary to how far you should go as far as size. And yeah, it's like a push and pull kind of thing. Like you want to size up on the great setups, but you also don't want to get too overboard and take that massive loss because it's always lurking around the corner.
Do you still have an itch for the market?
I do. I think
What about you?
Yeah.
Yeah.
You said you don't. You said you didn't, but I think
Yeah, no, I do. Like the reality is I have to be really strict with like, I don't do like if I don't want to trade a Friday, I can't talk trading. I can't talk it. I can't look at it. You can't ask me a question because the moment I open the chart and I look at it, if something makes sense to me, I click it. I click the button and then I'm there all day, you know. And I do really like resonate with that. So typically Mondays and Fridays for me are like heavy admin or life days. Like Tuesday, Wednesdays, Thursdays, you can talk trading 12, 16 hours a day with me. I'll sit at my computer till morning till night, as long as my non-negotiables, going to the gym, seeing, you know, my commitments are done. Trainings, you know, I'll live and breathe it all those days. But I can definitely put it down. You know, like for example, for the month of May, I'm very risk off. I'm just not interested in the market.
Yeah, they say sell me go away, right?
Yeah. I had a good January, I had a good April. I had a bad February. I don't want to have a bad May after my good April. So, you know, I'm going to go on holiday. I'm going to chill out. But
why not push the needle more?
I don't need to. Like I've had a really good start to the year. I had a really good start to Q1. I had a good end, middle Q2. I could just not have a bad Q3. Not a bad Q3 and not a bad Q4 won't be a good year.
Yeah, like what you were saying when you took a break and came back to the markets with like more clarity. I went through that cycle for a very long time. So sometimes when I was learning, I would take like 3 to 6 months off. And then when I came back, all of a sudden it was like...
Makes more sense,
makes way more sense. Like I could put on size without feeling nervous about it because you're carrying... People say that they don't, but you are carrying some of the losses with you. Like all the emotions that you've just, you know, gone through last week, you may think that it's in the back of your mind, but truly it's not. I think spending time away from the markets is so important to be able to reset. And it just feels a lot better when you're back in the markets and you're like on top of your edge for sure.
Yeah, no, I asked the question, why don't you push the needle more? Is more so for people watching, is because I think a lot of new traders have a good month, another good month, and then they go, all right, well, I'm going to have a bigger month next month. And I'm like, just because you had a good month does not mean you are guaranteed to have another good month.
And do you know what? That actually really fucked me up for a while, right? And I watched the podcast between you two when you had a really good year, and then next year was not anywhere near as good.
Yeah.
Like, and that can ruin most people, right? Like, you almost have an obligation of, if you go on a good run, you got to continue the good run, or you just can't do that.
Exactly. It wasn't even like the markets were bad because my setups were there. I just was mismanaging every single trade because I was trying to squeeze too much out of it.
Yeah.
I was trying to do too much, trying to size up too much, and it was just
And more so recently, like, I love the volatility, but it made me greedy.
I mean, we're human.
Yeah, of course, but it made me greedy, right? We were getting these 400-point moves in 5-6 minutes, like. And suddenly I'm holding for these 400-point moves that aren't happening in daily candles anymore.
And that's the context switch that happens that people don't catch on.
Yeah, and I'm just like round tripping 100K trades. Like I'm taking 100K to 20K and I'm like, geez, it's having 3 days on bounce now. It's 300K I left on the table. Like, okay, I made money. I'm not angry, but I'm disappointed. You know, I'm disappointed in myself. And I'm just like, let's just reset, take some money out, come back, not be point hungry, get out of our targets instead of like, okay, we've got out of those targets and then it ran 1,000 points against us.
Yeah.
You know, like, and it's like, okay, at that point, you know, when it goes past our expectations of where we wanted to get bullish, we then naturally get more bullish or bearish, you know, whatever. So, and then I can just start to take like sillier trades. So I like to stay in the market where I can.
Yeah.
But it made me greedy. And it's just taking, you know, pushing the needle sometimes can really have the opposite effect. And I left so much money on the table.
So like when your needle goes too far, right? Like how do you get back? I think probably risk less. I honestly like trade the smallest size possible, just to like get reps in the market. Like make sure I'm like executing properly. You know, getting in at a specific time, getting out at a specific time, sticking to that plan, and then start slowly working my way back into it.
One thing I struggle with right now is like sizing down. I'm not like decreasing size. I'm saying like going so small where I don't care. So a question to you is, where do you stay where you feel the burn to care enough? Because if I go and I risk like 1,000 a trade tomorrow, like it goes back to what I was saying early on. Like there does come a point where your emotions get completely dead. Like if you risk $10 or $100, 1,000, whatever that number is for you, you risk per trade, you're not gonna care what happens,
Yeah.
right?
I actually care more about like following my systems and my processes. So like even if I trade the smallest size possible, like 1 micro, I'm actually happy with just following the process because my tilt days are ugly. Or they have been ugly. They're not ugly. They're not as ugly anymore, but I just know like getting back in sync with doing that is so much more important than size. Like I don't really care about the size because the same trade that I took, right? And I've mentioned it a lot. The same trade that you take that's 1 micro that runs 300 points is the same trade, right? If you put on 100 minis, I mean, unless you're moving the market, right?
I mean, you're not moving the market.
Yeah.
It depends where you get in the market, right?
Yeah.
And that's the point. It's like, because I'm engaging at the extremes, if you are constantly constantly engaging in those 100 like larger trades, you actually hold the market up.
Yeah. And you use tight stops. So like for me, if I marketed in 50 lots, like I have a wide enough stop where hopefully there's another buyer or seller that comes in that protects that level.
Yeah, I think the point of, just to go back to what Kane was saying, of not pushing the needle is important for a lot of people, because I think even me, the first 4 or 5 years, 6 years,
You're
7
just
years,
redlining the whole time, right?
Yeah, I redlined. Like I'll tell you, when I had my biggest loss in 2020, it was because I was trying to push the needle.
Yeah.
And I got my ass kicked. Right.
We've
I
all
got
done
my
it.
ass kicked so bad.
We've all been on that hot run.
Yeah.
And like, I've had some hot runs that have just ended in tears. Like quite literally just like sitting on my computer like, well, what the fuck was that?
Yeah.
You know, like how did that even go down? We were so good at this for like 10, 15, 20 days, hot run, like back to back. And one day just fucking wiped 75% of it because we went on tilt, we did all that dumb stuff. And the reality is every person in the world has done that. Every good trader that's gone on the journey has done that. But it's how you recover from it and learn from it and adapt that, because it's going to happen again at some point, but it's minimizing that effect on it.
For me, I think the biggest safety net that you could do as a trader is like, don't put too much into your brokerage account. Like I know as much as you want to like compound the account and run it up like millions and millions and millions of dollars, it's probably smarter to withdraw the money, but still trade it like it's a million or whatever size you want. Still trade it that size. Don't worry about how much risk you're taking up from a percentage standpoint, because you could always refund the account, right? But it's better to not have the money in the account if you've made a lot of money.
Yeah.
Right? Because crypto is like the Wild West. I see way too many people running up tens of millions of dollars, round tripping the whole thing without taking anything out. And it's like, what are you doing? Just reset, you know, just put 500K into it, reset, take the money out. But people are so worried about paying my taxes. Like, pay the taxes. At least you have $5 million in the bank now, you know, and you're not going to just evaporate your.
The one thing I will say about having the mindset of saying allocating $1 million to an account and only depositing 50K is, at that point, 50K is not a lot, right? And you could very much just treat that like a coin in a slot machine. And quickly people can just go down that gambling route of this 50K, if I just 3x it, I've got 3 more lives in the machine now, right? And it's a very bad game to play. So you have to really be in a mindset of treating it with enough respect to know that 50K is a lot of money and it can do a lot of things, but also being able to push the needle far enough to say, I do have the money elsewhere if I need to top it up or I need to add more margin or go into that position for longer. But it's not something I would recommend to the average person because they quickly are just going to gamble it.
Yeah, I think as traders, like, it's hard to disassociate from money because, like, I think as traders, you want to get big, right? You want to trade big size, but, like, at some point, it's almost like you disrespect the money. Like, you're not respecting how much risk you're actually putting on.
Yeah, I mean,
I was going to say, do you guys...
Oh my days. Oh my days. I was speaking the whole time. Didn't have the mic on. Okay, chat. That's crazy. That's crazy. Okay, just a quick recap. Why I took the trade. This is a 3 minute. We have a protected high on the 3 minute. We have a protected low on the 3 minute. Protected high, protected low. That's our channel. I want to look for an entry to take a short continuation. Where would I look? I'm looking at the 0.618 Fibonacci level. Has had a retreat, touch 3 times. And that is, you know, considering the high time frame, 3 minutes, bearish external structure. That's enough for me to take a short. So just to show you what it looks like with everything else out of the way. Price is obviously bearish, okay? Price is obviously bearish here. We've come into this zone here. This is a break of structure, still bearish. We technically did hit a 15-minute demand zone here, and we have had a sort of a reaction here. Now it's still bearish on the lower time frame until we see a change of character. A change of character is when the order flow gets invalidated and it's confirmed that it's reversing. So for it to make a change of character, this protected high on the 3 minute has to be swept out before continuing upwards. So currently it hasn't been swept out. It's respecting this sort of middle, I guess, supply zone, and it has bounced off. It has reacted after 0.618 Fibonacci is what we spoke about, and so that's where we took that short, and that is what we're aiming for. So I am going to look at maybe considering taking partials around here. If not, I might just TP full here and then leave a bit TP like 6 micros and then let the rest run to the protected low. That's what we're looking at. Thank you very much, and yeah, we'll let this continue to run.
Go ahead. It kind of defers away, but go ahead.
I don't have any attachment to the money. Genuinely, like, it's not about the money for me. It's more about like the longer term plan of just being able to do nothing for the rest of my life. Like, the money I make today is not going to change my life today. It's going to change my life in 10 years because I'm trying to compound it over the next 10 years. And, you know, I will openly sit here and say, like, money genuinely doesn't faze me. Like, I can spend money, I can not spend money, I can give it away and do all those things. And that's, you know, 10 years ago, if I would have watched myself saying this, I would probably be like, liar. You know, because at the time, money really mattered to me.
Yeah.
And it was, I didn't want to be the, you know, guy that come from nothing or stayed having nothing or just stayed in my hometown and did all those things. So it really mattered. But actually, when you get to the stage of having the money, you realize that it's just the process of doing it that is where all the magic is.
Mm-hmm.
Right? And that's very cliche. And I understand that. And even when I was someone that was like, hey, if I had $1 million in a Lamborghini in my drive and a really nice house, I'd probably be a lot happier. The truth of the matter is like your problems just evolve, and you'll always have problems. So,
Yeah.
you know, I really, really disassociated from money over the last 3 to 4 years. And it's more about like the things I can do and the places I can go and the freedom that it gives me, more so than the things I can buy. I understand it. People like watches. I don't own a watch right now. Like, yeah, I have a nice car, but I'm actually thinking about getting rid of it because it just doesn't really serve me right now. You know, have a nice house and I can go on holiday and do all these fun things and go nice places. They matter way more to me than the material things now. So I got into trading, and again, it's probably railroading this conversation. I got into trading for a completely different reason. But trading has just made me really mature around money. But then having that non-attachment to money in trading is actually part of my edge. I can sit in those heavy amounts of drawdown on those larger when I'm pushing the needle. And I can also sit in those heavy amounts of profits and really let those trades run. And that's just part of my edge, where I can be down 50 and up 200 and I feel the same.
Yeah, that's what I was going to ask in terms of, do you think your relationship with money has to evolve and you have to like let go of that, what money really feels, to become a really good trader? And I feel like you do, because my relationship with money's also kind of evolved a lot in the first kind of like last 6 years. And I've noticed when that evolvement did happen, I started becoming a much, much better trader. Like 50 grand is a lot of money, right? But like when I get into my trading side, 50 grand is not a lot of money. $500,000 is not a lot of money. And I hope that part doesn't get clipped up and people start going crazy. But I'm saying from a trading point of view, because the element of money changes, right?
Yeah.
And what I've noticed that's happened with me at times, and I have to like get back into like the healthy roots again, is when I go from trading side to like normal personal life, that part carries over. So it's like in trading, I don't care about 400 grand. I don't care about 100 grand. So when I go into like my personal life, I don't care about 100 grand either. To me, it's like,
But you quickly do, right?
sometimes I don't.
Yeah.
Sometimes I cause it's like, oh, this thing or event or whatever is going to cost 40 grand. I'm like, that's a fucking trade.
Yeah.
Right.
And there's a bad way to look at life though, isn't it?
Yeah.
And the thing is, you have to really catch yourself on that, because I also do that, right? Like me and you had a conversation with another person recently. It's like, in the grand scheme of life, 10 grand's a lot.
No, I know,
right?
100%.
You can't
That's
argue.
what I mean. That's
You
what I
can't
mean.
argue.
At some point, you almost don't respect the 10 grand
Yes.
for what it is.
Yeah.
So it's like, if I blow 200 grand tomorrow, it's like, I don't feel anything though, right? But it does mean a lot.
Yeah, but don't you guys think that needing that of like 200 grand doesn't mean much in trading?
You can do it.
It's a superpower.
It's a superpower. Yeah.
Yeah.
Dead right.
Right? The problem is when you carry it over to your real life and you're like, shit, no, it is a lot of money. Let me not have that same mindset. Because, when I take some trades, right, my point of view is like, okay, this trade cost me 100 grand.
Yeah.
It cost me 100 grand to make 300 or 200, whatever it is, right? But then when you transfer that over to real life, it becomes problematic. But then in trading, that's such a good thing to have.
Of doing business.
And I've seen people the opposite way, where they're so stingy with money in their personal life. And I've noticed that when they go into trading, they cannot ever appropriately take the right risks on a trade.
Yeah.
And they have such a bad attachment with money that if there was 2K, they're like, oh my God, I'm risking 2K. What if I lose it? And that starts messing people up. And that's also a big problem I've noticed, especially in early stages, where if you're risking money that, like, let's say you have 5 grand to your name and you risk all of that money and you have nothing else, like, you're gonna naturally have these feelings. If you're risking your rent money, you're gonna have these problems, right? So it's also knowing, like, hey, what money can I play with the market and then detach from it so I can risk and take on trades without this, like, new level of added pressure.
I don't know if you guys experienced it, like, but whenever my bank accounts hit a specific level, it would always like drop off a little bit because I couldn't manage it appropriately. Like, I'd hit a certain level and it would come back like 10, 20%. And I don't know. I think when I first started trading, I was dead broke. Like, I didn't have any money. I could barely afford an education course. So I think, as you grow and mature as a person, like, either you build a better relationship with money or you don't. I think some people, and I've had that discussion with some senior traders in Chicago. You just said some people are just not risk takers. Like, some people just cannot get past the point of risking $1,000 on a trade because they have too much of an attachment to money, and they're not able to size up to the scale that they're possibly their true potential. So I think at some point, some traders just can't get past that barrier. Whatever that barrier is for you, like, you have to find a way to get.
I think there's two sides to it, right? Because I had a similar problem. So to give some context, when I was 18, 19, I had a job. I wouldn't get Starbucks coffee because it was like $8, $9. And I was like, shit, I got to work a whole hour to, get this. I wouldn't go and eat a steak dinner because it's like, oh shit, I have to work like 8 hours to just pay for a meal of dinner. So when I went into trading, that kind of mindset went there where it's like, oh shit, this is $100, this is $200. I think for me, what changed is when I got to that moment of knowing that I could make money from trading and I've done it consistently enough, you start having this internal thing like, okay, well, I do have this thing. I do have a machine that's repeatable, right? That I can understand, that I can make money. Obviously, I can screw it up if I don't follow it. Once I got there, the kind of scarcity of money started going away where it's like, oh shit, I shouldn't risk it. So for me, that's kind of what helped me evolve. And I'm saying that because I know some people are stuck at that stage and they can't take on more risk. They can't, take a trade and like just look at the trade straightforward. They kind of get stuck at, oh shit, I can't lose this $100. Oh, I can't lose this $200. And I think that also goes into like having an edge and having a strategy and kind of being confident in your approach that you've proven and you've seen work out over time. That starts killing off the risk point.
To me, it's just a game of probability, and you probably got it a lot too. They're like, these guys are just gambling. But like the thing was, it's a game of numbers. So like when me and Kane have like $50,000 in each account, if I'm risking $1,000, $2,000, $3,000 per trade, I don't know how many trades I would have to lose in a row to blow the account. And I haven't lost, 10 trades in a row in a very long time. And at that point, it doesn't become as far as size, it doesn't matter, right? Like if I had X amount of dollars in my account, I know I can have X amount of trades that I could possibly go on tilt. I'm just going to size appropriately. So if I go on a losing streak, it's not going to blow me out, and I can position myself properly to capitalize on the upside.
Just going back to your earlier point, Umar, in terms of that separation, what is there anything in particular that helps you to separate that mindset between, what you're doing in personal life and spending or cost wise and the trading side?
Honestly, I just try to ground myself because honestly, I'm not gonna lie, there's periods I go on really bad tilts in personal life. Like I get to points because I trade for 6 weeks and I'm like so locked in, and it's like it's hard to go in and out of it, and it's like start spending money on like, it's not like I'm stupid with money. I'm not going to clubs and stupid stuff like that, but it's like the value of like 50K isn't 50K to me. It's like, it's a trade.
Yeah.
Like,
you made it in a day. So it's like, I could spend it in a day.
yeah. I'm like, oh, I took this trade. I made 50K. It was like an hour. Like I go to games and like some of the games are like 20K a ticket. I'm like, that's a trade. That's a 3-hour game, but it's a 20-minute trade. And it's like, it's okay and it's justifiable. But then I think you need to like stay grounded and like realize like this is still a lot of money.
Mm-hmm.
Yeah.
I think it's just always something that, not really a battle, but it's something that it will always kind of creep in. It's the nature of the beast, if you will. And as you say, you just have to kind of catch yourself and sort of ground yourself and bring it back to center. And it kind of is a positive thing in a way, because when you're doing all this positive trading, you're locked in. You're not really getting to enjoy everything else outside, because to achieve the result, you're really hyper focused.
Yeah.
So as a byproduct, in a sense, once you've gotten the result, in a way, like rewarding yourself, kind of living life a bit, it's, I don't know, kind of part of the grounding technique.
It can have a negative effect though, right?
Yeah.
And I really like the saying, just because you can doesn't mean you should.
Yeah. I love it. Yeah.
Like, we can all do really silly stuff. Doesn't mean we should do it, right?
Yeah.
And okay, it might feel great in the moment, or like, what's the worst thing that can happen? Like, in 6 weeks' time, when suddenly you're like, well, we spent 200K that one weekend partying with the boys and doing this, and now I have to trade more to make it back. It's like, it can have that adverse effect, because then suddenly you go back to trading. You're like, I spent the money. I now need to actually
make it back.
To be back to where I was, right?
I'm actually the happiest, like when I'm in my routine and I'm just home in my office.
Yeah.
Just grinding. Like,
I'm not.
No.
I just love getting about. Like, I love going and seeing the world and doing all the stuff. But again, similar to Umar, I really go on tilt in my personal life and just really spending money just because I can.
Yeah. I think it's important though. Like, you should experience the fruits of your labor. Like, you've worked extremely hard for it. Like,
it's taking the piss.
There's a balance. There's a balance. There is a balance though. Like, traveling and stuff is nice. Like, I enjoy traveling, but at some point I get burnt out from traveling. Like, I was 2 years ago, I was traveling so much. Last year, I barely traveled at all.
Yeah.
I was like, I'm over traveling, and I was actually probably just as happy, kind of just working.
Mm-hmm.
Yeah, I don't know how people do that. Everyone's like, oh, I would retire and travel for like 5 years. I'm like, bro, I can do it for a month, but like,
do it for a weekend.
Yeah, maybe a month max. After that, I gotta do something. I gotta get stimulated.
Get itchy for it.
Yeah, something, right?
I don't. No, I could just sit on a beach.
Really?
Yeah.
Really?
No, 100%.
Okay.
Doing it for the number, and once the number gets hit, like, you won't see me again. Yeah.
There was a time, no doubt, in every trader's career, and same with you guys, in terms of, there was a time where you would look at you've taken a trade and you're feeling the emotion of each candle, each movement up and down, right? When is there any sort of moment in your career where that sort of detachment happens, where you're not really watching it as closely, those emotions aren't really tied to the exact, you can picture it now. Most traders who are watching probably sit there and observe, the trade they've taken. They're watching on a lower time frame. They're watching every tick and every point and every pip, and they're feeling a kind of way. And I don't think that serves you as a trader. I think, if anything, it causes a lot of tilt and a lot of bad decisions. So was there any moments or anything stand out to each of you which kind of helped you to detach and get away from that mindset?
I think for me, it wasn't detaching from it. It was, look, losses will always hurt, and our scale, like, okay, so two things. One, losses don't hurt as much as when I have stupid losses. Stupid losses are when I take this dumb trade and I shouldn't have taken it, and I sized up too much on it. Like, that's what hurts me a lot, right? But in terms of like when I take a trade, like for example, if I take a trade and my risk is 20K, I accept like, oh, fuck it, I just blew 20K. I blew 50K. So I go into the trade already accepting that I lost the money. So I'm not looking at each candle and every up and down move, and I'm not letting it like alter my kind of psyche. It's more like, okay, I risk 20K. I know if it gets here, I lose 20. I already lost 20. If I make money, wow. If I don't make money, but that took me like 4 or 5 years to kind of get there. Yeah.
Yeah, for me, like I think just looking at all the trades that I missed because I was micromanaging it, like hopping back and forth between long, short, when if I just left the original trade on, didn't do anything, like could have gone to the beach, done whatever, I would have made so much more money. And I think realizing that you're not in control of the market once you place that position. You have to be accepting of the risk, put the risk on, manage your stops appropriately, have a target in mind, an exit in mind, and that's really all you can do, to be honest. So, yeah, I think you got to learn how to be more hands-off with your trades, 100%.
Yeah.
Same.
Pretty much same. Like,
Yeah.
I very much am, as soon as I'm in that trade, I lose 20 grand. Like in my head, I paid 20 grand to be in the trade, and I have a model for getting break even. I then get that 20 grand back. And if it plays out, it plays out, and if not, I don't make any money. But the thing is like I'm really good at managing my stop. But like when I get close to my TP, and then I find all these reasons as to why it's going higher or lower, that's where I really leave the money on the table. And sometimes, like I'll lift my TP, we go through it, I put my TP where I would get out, and I go about my day and I make way more money. And sometimes I come back and I would have made more and I get stopped where I would have. Those days don't really bother me. It's the days where I'm like a little bit lower, a little bit lower, a little bit lower, a little bit lower, God candle break even. They're the days that absolutely wreck my psyche. Like, they just write me off. Like,
What do you do after that?
Oh, a 30-second 400-point candle. Huh, fuck me. Nice. Yeah, great.
What do you do? What do you do after that?
Probably just, it depends really. Depends on the time of the day, right? If it's like later in the evening, I probably just do nothing.
Yeah.
Like I just close the laptop, put the laptop in another room, and just go in another room, watch TV. If it's like middle of the peak trading day, rant about it on Twitter. Like, I don't know. Is that in the middle of the day, that's the hardest one for me. But then I just probably just don't touch it, lock myself out for the day and move on. But then I find myself power hour at the close thinking, all right, the MOC's hour is going to kick in and we're going to sell 400 points lower. And I'm watching it and I'm like, okay, nothing. And I waste my time. So little things. But then sometimes I could just like not think about trading for 4 days and literally don't look at the chart other than 9:30 till 10:30 and I close it. So I just go through phases with it, depending on where my focus is or what's going on in my life. You have the ability to just step away from the chart and go and do other stuff, focus on growing businesses, doing whatever. If I'm in that phase where I've got loads of stuff to do in my personal life, I can just really leave trading. If I'm not doing much, I can just really find myself being like,
Yeah.
Yeah.
That was a big thing for me. I think when I had other things to do and I had to kind of be attentive to it, my trading got better. Prior to that, like if it's like Monday morning and I have nothing going on and I'm up, oh, let me open my laptop. Let me just see. I'm not trading. I'm not going to do anything. Oh, this looks like a good trade.
Yeah.
Oh, this looks like a really good trade. You get in, trades in your favor. Oh shit, let me size up. Boom. Right? So
Big loss.
Yeah, big loss. And you're like, shit. And now you're in that mindset of like, you're mad at yourself. You're trying to make the money back. So for me, I think having those other things and where I'm like, shit, I got to be off at 11. Oh shit, I have this. I can't do this. Weirdly, surprisingly, it's helped me become a better trader. And it helped me just like, all right, I can take off from here for 4 weeks. I can trade. Okay, next 4 weeks, I can't trade. So I can kind of manage my time so much more. Yeah.
One thing we skipped over was in terms of yourself. Like, do you still have that itch for trading?
Nah, it's gone. It's been
completely.
Hiyo. Hello.
Can you hear me?
Yeah, now I can.
Awesome.
They'll spend the next 30 minutes drawing lines, analyzing patterns, and calculating risks, while suspecting that better setups
Nay?
Shania, I got the money you sent with Remitly. Thank you, Nak.
No problem. It's so hot here in Sydney. I need your help. You always made the best halo-halo. I really want one.
Sure. Okay, first shake your ice, then makapuno, munggo, jelly, add milk.
Nay, we forgot one thing.
Ube!
Stay close even when you're far apart. Send money worldwide with the Remitly app.
Would you look at that, chat? I forgot. That would have been a 7.5 risk to reward. I left my trade there. Oh my goodness gracious. Could you believe it? Oh my god. How frustrating. Man, oh man. Oh my gosh. What do I even say to that? Alright guys, look, I'm just gonna long from here. I'm taking a long from here. Rejection candle at 3 minute at this protected section, protected low. Which means, you know, internally on the 15 minute, this POI has been respected twice, finally signaling to us that there is a weak swing leg there. Okay. One small one there. On one day. And yeah. Let's gonna let this try and sit there for this trade. Count there. There we are. Oh, well, that closed me out. And that one's closed out. You know what? I want to see it sweep this here. So one will live by here. I feel like it's supposed to. Well, this owl candle is talking to me. He's telling me that it wants to sweep this protected low. Oh. Okay, that's a big move. I'm gonna sort of be tight here. I think I'm trying to scalp some positions here, this volatility. Sell 3. Whoa. Sell 3. TP. Wait. Oh, shit. It's supposed to be the other way around. To be scalping some stuff here. Oh, where am I taking these trades on? Yeah, that one. Wait for a pullback and then enter. Yep. Oh, there you go. Oh, there goes one funded account. Oh my gosh. I'm so tilted, guys. I'm just... That whole trade that I left there and I didn't come back onto, man. Are you serious? That one really did trigger me. And this one, the quick close out here, that one also really messed with me. Oh my gosh. Gosh, hold up. Man, I'm just so triggered. Alright chat, well that's pretty much it then. Oh man, I should stop here. I'll see you in the next one.